Good afternoon, everyone. This is Rajendran here, joining from Market Calls, and welcome everyone to the final session on order flow and market profile analysis. So, with this one, we're going to complete. All the theoretical sessions related to market profile and order flow, and hardly we're going to spend some 1.5 hours, and then rest of the time we can utilize to take questions and. Any questions related to market profile and order flow, you can ask if you have any doubts. So this next 1.5 hours will be a good session to clarify all your doubts and concerns about order flow and market profile. So we talked about a couple of strategies in the morning. Closely, we talked about total 7 strategies, and the 8th one is the
connection.
The 8th one is we use R delta. R delta, we already talked about this R delta many times, and it's a momentum exhaustion setup. Momentum exhaustion setup where it is mostly decided based upon the we'll be looking for a divergence from the price and also from the delta. So it uses divergence between price and delta. And also, we also look into the min delta and max delta for the confirmation. Right? So we already talked about this many times, so I'm not going to repeat again. So I request, if you are joining new, I request you to go back and go through the old videos. R delta, it also comes with an automated alerts as well. So comes an automated alerts. That's a separate module in Bell order flow. One of the way we can identify a momentum exhaustion setup. So it's a momentum exhaustion setup. And next comes the R delta with the ABC elongation. R delta signals you're getting with ABC elongation from the profile. Elongation.
This R delta, is there any patterns, sir? R delta to identify instead of automated alerts?
We already talked about it in the last session. I request you to go through the last videos. So you have to look into the min delta and max delta. You can identify it, but live markets, you cannot watch everything. Right? That is why we brought the alerts. So next comes R delta with ABC elongation from the profile, from market profile. And so this setup, it talks about, there is an ABC elongation with a multi-day breakout, and plus the end confirmation, the momentum exhaustion. The momentum exhaustion happens from order flow. One of the day where we figure out that the bottom has been established. Recently, we've seen an S-Bank example, right? So some couple of days back, we've seen an S-Bank where the ABC elongation happened, and then if you looked in the order of R delta, there was a signal there at the day's low, and that's kind of a momentum exhaustion. And R delta provides an confirmation that is a momentum exhaustion zone. So you can take an intraday mean reversion trades. So one of the zone where you can take a intraday mean reversion trades. Mean reversion trades, or it's kind of a responsive trading. So it's mostly related to responsive trading. It's not initiative trading because we are looking for a momentum exhaustion, and lack of momentum exhaustion is where market moves to the other side. It's kind of a momentum exhaustion setup, kind of a responsive trading. The 10th comes the unsecure high or unsecure lows. Many times you might see I'm using the concept unsecure highs and unsecure lows, right? So usually at the day's high in Nifty or Bank Nifty, you'll be finding at the day high or a day low, it'll be like, probably if you look into the last week session, right, last Friday session, if you look into the Nifty future day high, the day high was 69 lots. Right? In terms of lots, it was almost 63 lots at the day high. And if you look into the day low also, which is kind of a secure high, it's just a good high. If you look at the volume profile, more volume activity happens at the center, right? So more volume activity was happening at the center. more volume activity was happening at the day center, whereas at the day's edges, it should not have a bigger volume, right? So if it is having a bigger volume, then that is a poorly facilitated trade. Again, you can see the day low is 10, which is a good facilitation, happens on both the sides, right? If there is any poor facilitation, probably you'll be seeing numbers greater than 400 or more than 500 or times 1000, 2000, right? So it doesn't matter whether they are a big buyer or a big seller. It is still treated as a unsecure high or an unsecure low, right? So if it is happening at the, because most of the time when you are seeing a good auction will be having a bell curve shape. The volume profile will be showing like a bell curve. But if one of the day is having a bigger volume, if you are seeing a bigger volume here, and there you'll be seeing a spike in this day's edges. So this is not a good facilitation. This is a poor facilitation of the trade. So even if the price moves away from that, the price again comes to revisit it, and it mostly revisits intraday. If it are not revisiting intraday, that reference level are still active for the next T plus 3 trading session, 3 or 4 trading sessions, is usually gets cleared. Very rarely the yesterday's one 10,996, which got cleared after 5 plus trading sessions. Right, it took 5 trading sessions to clear that levels. But otherwise, so far we observed those reference level gets cleared within 3 or 4 days. Right, so again, that is again a short-term reference. If you're seeing such kind of big buying activity or a big selling activity at the day's high or the day's low, then you may expect some rally, temporary rally. At times it could be intraday rally, and then usually, let's say, price is coming down. There is a big selling quantity or a big buying quantity, whatever it is. Some big buying quantity or big selling activity was happening, and price usually takes a mean reversion. At times it does a complete mean reversion.
Lost.
At times it does a complete mean reversion, right? And but eventually that levels will be coming within T plus 3 days, T plus 3 or T plus 4. You can expect that levels to get corrected. So that's what that level price will attempt to revisit back, because it is a poorly facilitated trade. This trade which is having a high volume here, it's a poorly facilitated trade. So price often revisits to clear those references. Then we say that the level has been secured. Otherwise, it will be still called as a unsecured reference level from order flow. Right, and so far last series, almost 3 to 4 such levels came, and most of the reference level got cleared in 3 or 4 plus days. And every time it throws an opportunity there, and only the last one, when it is testing 10,960 levels, it took more than one more extra day, and then but still eventually it got cleared those reference level as well. So unsecured high and unsecured low, they are not trading strategies, by the way, but using that information, it tells you that levels will get cleared. So for Nifty or Bank Nifty, if volume at the edges are more than 400 lots, I'm talking about lots, not in terms of shares, then it can be treated. Then day high or low is treated as unsecured reference. Just give me a second, I'll be back in 5 minutes. Yeah, I'm sorry, I'm back here. So there is a question, I'm new to market profile, what do you advise me on? Trading strategies for active traders. See, trading strategies for active traders is like, I'm new to markets, I don't want to try market profile, I don't want to try order flow, I cannot struggle in my life much, I don't want to learn anything. Give me only strategies, I want to trade. That's kind of people it's going to address. But still, there also we're going to talk about the basics of market profile there, because the same market profile strategies will be covered. Along with that, some of the Amibooker based automated trading systems. It's purely math based trading systems we developed. We're going to talk about a lot of strategies there. And we're going to explain back testing, optimization, walk forward testing, robustness of the system. It's completely a different game there.
Sir?
Yeah.
So this volume, how many minutes candle we have to see, sir, for 400 above?
5 minutes.
5 minutes. Okay.
Right. So
Sir, yeah. You carry on, sir. You are saying about the trading strategies, sir.
yeah, trading strategy for active traders is for traders who want to play with indicators. Right? That's a completely different game. It's purely math-based game. It's for the people like they don't want to know the nitty-gritties of market profile or just give me a lot of background noise is getting generated. So it's for the people who want to play systems. It's more of a rule based trading. You tell me which rule I should follow. You tell me whether this rule I should follow I will make money or not. I will automate it or I will just follow the rules manually, and then they go and play the strategy based game. It's mostly a strategy based math driven game, right? So only thing is it will be controlling the risk for you, and returns is what the market gives. That kind of thing it is. There is absolutely zero prediction there. And the second thing is there also we're going to talk about market profile strategies and ABC elongation strategies. So a couple of intraday strategies. Only we'll be talking only strategies there. So you trade the strategy, that's it. You're done. So we're not going to talk about the market understanding, all those stuff. So we're not going to talk about what is that? Back-to-back from in point of control or the what is secure high, what is unsecure high. We're not going to look into the fine core order flow stuff. We're not going to focus on. We will be focusing on the basics of order flow there. I mean, the basics of market profile there. And in depth, we'll be discussing about strategies and how to optimize it. More and more, we're going to discuss about strategies only. So it's up to you how you want to approach the market. There are two ways one can approach the markets. One is a pure mathematics way. Second one is the one market profile and order flow way. It's mostly an art of doing business here, whereas that game is completely a pure math driven game, right? So it's up to you which one you want to select. Accordingly, you can go and experiment with that.
Sir, it's all about the automated indicators you mean to say, sir?
Yeah, automated stuff. Everything is related to automated strategies.
Okay. So is it not related to algo trading, sir?
Algo trading is automated trading. What difference it is? They are both the same only.
Okay. Even we can do it manually also, sir?
Yeah, you can do it manually also.
Okay.
Algo trading, automated trading, robo trading, all are same names only. Okay, so now let's come back to the session here. So, but some people will be feeling like, oh, so much of complex information, too much of information, right? So the thing is that learn to deal with that. Markets are even more complex than what I am talking right now here, right? So
to plug in that strategies, we need to pay something extra to our broker, sir, or how?
which one?
Like to plug in that strategy with the ME broker, we need to pay some extra fee on that phone, sir. Again,
to whom?
To the broker, ME broker, to whom we like the data provider.
No, data provider. It's the same data.
Okay. Okay, sir.
You need to take some
The
API.
question is, let me rephrase the question, sir. The question is, if we get into an order in the automated trading, so do we need to buy anything for platform? Say, for example, I am going to use some of the indicators what you are giving. So for those,
yeah, it depends upon which platform you want to do. So some broker charges API fee, and some broker. I mean, almost every broker charges an API fee there. So there'll be platform fee involved in that.
Okay.
Broker will be charging some API charges along with that. And it varies, depends upon the broker to broker.
Okay, sir.
So just give me a second. I'll get back. And so the other strategy which we are going to look into is reference.
Here you put somewhere 5 minutes, sir. It is more than 400 lots in 5 minutes.
Then they are treated as an unsecured reference, and odds of revisiting mostly on the same day. If not revisited, then let's say if numbers are really big, like greater than 1,000 plus at the day high or day low, then information has to be carry forwarded, and in that case, expectation of revisit anywhere between 3 to 4 trading sessions, right? So next, one more example I want to talk about here is swing breakout strategy. Most of the players are breakout players in the markets. Swing breakout strategy. So when it comes to the order flow, it will be like, maybe I'll give an example. As of now, there are no recent swing breakout examples in Nifty or Bank Nifty because we are stuck in a sideways market. I am not able to show that, but I'll tell you how it looks like when there is a swing breakout is happening. Let's say we are reaching a swing and we are nearing the swing. Price is nearing that swing level. Assume that this is a swing reference level. And when the swing reference level is reached, so probably you'll be seeing a lot of momentum at those levels. So when it's breaking those levels, so there'll be a break you'll be seeing. So it'll be kind of an initiative drive you'll be seeing there. You'll be seeing an initiative drive on the order flow. So thick momentum buyers will be coming exactly at those reference level. It will be initiative drive, and where price shoots up and it keeps moving higher and higher and higher. And there are also, it can also happen in this way as well. For example, they do a lot of they don't accept immediately. They do a lot of ping pong game. They even come down and again go up, come down again, go up, and come up, go up. And one place they will do a sharp initiative drive there. So now have to wait for that initiative drive. Whereas all these places you'll be seeing a lot of absorption from the buyers. You'll be seeing a lot of absorption from the buyers, and here there'll be initiative drive. So here you'll be seeing absorption. You'll be seeing a lot of negative delta, but still price will be going sideways and still sideways to higher. That is mostly absorption from the buyers, and followed by that initiative drive. That is where you can initiate a trade. One of the places where you can say like high confidence buying is happening. So market try to move to the newer level. Right. So every time a swing high or a swing low is nearing, it's going to give a clear reference from the order flow. So the thing is that you have to how to practice this. Every time a price is nearing a swing high and a swing low, keep a reference level there on your charts and then try to watch whether absorption is happening or initiative drive is happening. How if it is a failed breakout strategy, how to trade, what parameters I have to watch. If it is a continuation, then what I have to watch. How confidently I can say that it is an initiative drive, and when you are seeing the initiative drive, that is where your trading opportunity comes. It comes with a lot of momentum reference level, and that zone will be acting like your support zone in this case. Even if the price comes down, they'll take a support at that level, and again they rally it back. Right. So initiative drive and absorption are very classical strategies. When you are playing from order flow, you'll be able to understand. Maybe as of now, I don't have any suitable example for a trend breakout from Nifty or Bank Nifty. When we are seeing such kind of trend breakouts, I'll try to collect those information and I'll try to present you in the upcoming community webinar or so. Right. So,
sir, I have one question.
Yes.
Sir, other strategies like can slim when there is a breakout at new highs, in cash market, have you seen like order flow confirming yes, this breakout is very good quality breakout?
See, I understand that canceling is an investing strategy, right?
Yeah.
I'm talking about an short-term perspective, from an intraday perspective, or from an the days perspective, or very, very positional perspective. Cancel limit talks about an investing level. They don't care about this kind of whipsaws. They don't care about previous swing high whipsaws, I believe.
No, I'm talking like when a stock breakouts, let's say to a new high.
Okay.
Have you seen like in order flow, we can say, yes, this breakout is a high quality breakout or something. Have you ever?
No, from market profile we can say, but not from order flow.
Okay.
The way market profile, when the price is getting out of the balance, how it is getting out of the balance, that's what it really matters, and how the continuation is happening, that's what it matters. From market profile perspective, we can confirm that. Like as I said, most of the balance breakouts, if it is a clear breakout, you'll be seeing a strong auction from the market profile perspective. It will be coming in the form of an. I already repeated in the last session, but now I'll repeat it again. Let's say there is a balance developing. There is a balance developing. Price is moving up and down. So most of the edges will be controlled by short-term sellers and buyers on both the sides. So if it's a high-quality breakout, let's say market ends here. If it's a high-quality breakout, it can come in two ways. One, it opens gap up and it straight away rallies. This is number one. Number two is like the opening itself. Price opens here. Straight away, they took a straight drive and they keep marching.
Okay.
Right. So one classical example for a good breakout is the recent 5-minute charts. 55-minute time frame charts where there was a balance some time back. So this balance was going for quite some time. The price was sticking to the balance, and so what happened here is that price was staying inside the balance. There was a rally high, and finally next day price opens at balance edges. It was doing some activity, and then it breaks out and it started accelerating. So we looked into that. The gap of opening at the edge itself, it's a confirmation that could be a possibilities of a breakout, and more trading activity happens above the balance. A breakout comes. So I said, like, you have to wait for the balance price to come out of the balance. The moment price comes out of the balance, without thinking, one should initiate the trade. That's what the call we talked about on January 31st, right? So let me also take you on that day, how we talked about, how we looked into January 31st today. January 31st today. Let me get you the daily market commentary. Jan 31st. Okay, it's in D drive. Here's a market commentary at Jan 31st. Morning everyone, this is Rajendran here joining from Market Calls, and welcome everyone to daily market commentary, right? And live training session on market profile and order flow. Of course, we are not going to look into order flow today, but we are going to look into more of market profile, interesting patterns developing there in Nifty, right? So let's look into the Nifty pattern here. Let me pull up Ninja Trader charts here. Of late, last two trading sessions, Ninja Trader is behaving pretty weirdly. So what I was seeing there yesterday, the sell-off which came, right? So it got back into the packet, and then so we talked about this yesterday. We are talking about on a 5-minute time frame. There was a packeted zone there. So now what we are having is a balance. This is one more bigger balance which we developed yesterday, right? So on a 5-minute time frame, so any look about the balance and acceleration is one of the good sentiment for going towards the long. Right? So all you can do is initiate the long and then monitor. So there was a gap came up. It's not a gap, but then price opens at the at previous day's edge, and if you look precisely at yesterday's high, the high was exactly at 10,699.9, right? So that is the high which came in yesterday's session. So high here exactly at 10,699.9, exactly at this location, which is most likely a short-term selling, kind of a short-term selling. Still, more stops are above 10,700 levels. So any auction which is happening there, right? So any further action which is happening over there could be the day could be converting kind of a drive kind of day. So confidence could be changing higher. We are at the day's edge, right? Price is trading very close to the day's edge. So as of now, not much of a clues there, but definitely. So that's what we monitored at the beginning, and the second, almost 10:30. So almost 10:30, we had one more final lookup. Okay, maybe I have to just 5 minutes of talk over there. Just give me a second. Okay, anyways, I'll show you what happened there. What happened there is that it's a clear breakout, and I also explained why one should trade towards 10,820 or even 960 levels. I was expecting 10,960, but then it haven't came on the same day, but it came on the very next day as well. So I thought like there was a failed auction there. There was a failed auction. There was an AB poor high, and there is an unfinished auction, unsecured high from the order flow on this particular date, right? So everything which I thought like 25th we had an on 25th we had an AB poor high, Plus it is also an unsecured high. The day high was closely having some 1,500 lots, unsecured high from OFA, order flow analysis. And again here, this high is closely having this high is nothing but a psychological reference, and the past back-to-back secure high. We got a back-to-back secure high there, secure high. And one of the reasons which I said was 10,960, which is possible mostly because of these two references, AB poor high and unsecured high from order flow, right? And anyways, if you missed the market commentary on that particular day, I'm gonna play you how the last 10 minutes, how we seen that information, right? So just give me a second. I'm gonna play it. I think the recording is almost done. Yeah, it's almost done. Okay, so let's play this. I'm just playing the video. Outside, stop hunting kind of.
You're in mute.
So, okay, now you're able to hear me, right?
Yeah, yes.
So this is a move probably which we can say like it's put the price outside the balance. Very fast move coming outside, stop hunting kind of. Let's see how this is going to grow up. I want to remove the other references. We don't have any other references here. So this is a previous swing low. A lot of activity happened, and then we are just keep moving up. So I see here. So previous day's low has been broken out. Not to fight this trend. This trend has a potential to go till 10,960 levels. ABC would have been formed in this zone, right? So ABC, and the C is breaking out. So today's expiry, maybe it may not happen today. Very rarely it happens, but yes, it can happen. Since we have an FA at day high, 10,960, T plus 5, if at all, if they have to go and get it, they can go and get it. FA has the odds. You can think, if you want to play odds, get some cheap expiry options. Don't bet much, don't bet too much. Maybe somewhere around some 1,000 quantities at some. I mean, in fact, this particular day I got an 10,800 call option at roughly around 2.5 rupees. 2.5 rupees around 12:30. I bought around that, and I finally closed around 33 rupees. 33 is my average selling price. One half I sold at 36, and another half I sold at 29. Right, so. So around 3 o'clock or 3:05, I closed the positions, and that M2M was closely 1.5 lakhs. Right, so this kind of activity happens very rarely. My expectation was 10,960, but lately around 3 o'clock or 3:05, I realized that it may not happen, or it's okay to take the thing from the table, because last 25 minutes it happens also. It's okay. So let's take off whatever is there on the table. So I closed my positions at decent M2M there. Still remember, I'll continue this analysis. 2 rupees or 2 rupee option or 3 rupee option. You can go and get it. You can only play the odds. It happens, it happens. It doesn't happen, you should not regret. Or if you are, if you want to play the game, just go and play in futures. One can initiate a trade here, and of course, risk is yours, right? So don't blame me if something goes wrong. Make sure that if something is going wrong, what you can do here is that, right, think where possibly it could go wrong. Like maybe I look above the balance and fail. There's some stop loss. Some monitoring zone, you have to take a reference here, which invalidates your thoughts. So if you ask me, probably I would say that the center of the balance here, the center of the balance, which could act like a support, as a kind of a positional support here. Maybe more activity happened in this balance. So somewhere around 10,660 levels, or maybe I could use this as an this zone, like anything above 10,651 could be the zone, or maybe around anything below 10,681 would be the levels where I can think about closing my trades there. So always remember, today is an expiry day, so always expiries can be crazy. But what we are seeing is a look above the balance and acceleration, so far at least. Most of the time, it doesn't disappoint. You see that it's a slow and steady move. It's not a all of a sudden breakout move. All of a sudden breakout move, if it is happening, then you need to check whether it's converting into a momentum auction reversal or not. If it is not, then you have to continue. Right. So in this case, it's a slow and steady auction move initially. So anyways, we'll look into Bank Nifty, what Bank Nifty is doing. Bank Nifty is it's holding a high confidence setup, right? So it's an ABC balancing so far, but all the odds of high confidence setup is there. And Bank Nifty, ICICI Bank, are there any movements out there? Not much of movements yet. And Maruti is also not much of an activity. Maybe I think the activity might be happening from Reliance, or somebody might be moving there. How about S Bank? Bank, they came up to 195 levels. Maybe that C period single prints would have been almost there won't be not much of a C period single prints at least. But B period single prints might be around 196 levels. That's a maximum thing, but still it's maintaining high confidence selling. But it always good to protect it. When you're seeing this kinds of activity, a lot of ABC elongation and kind of a movement of exhaustion happening on a 3-minute time frame, it's good to have some sort of a hedge, mostly an intraday hedge, right? That's it. But you should be on a position. If something is going wrong, you should be also in a position to cut off your hedge as well. Right? So if again price started falling in, you should be considering hitting a hedge. Very rarely these kinds of ABC elongation could convert into a B-shaped structure. So to convert into a B-shaped structure, very rarely. Usually it clears and then it does something else. It does something else. Or very, if it is coming with some sort of a sentiment, an ABC elongation could do a complete reversal with a late spike. Right? So ABC elongation with a multi-day breakout, if it is coming with a new sentiment, I'm not sure whether any new sentiment is there right now or not. If it is there, just please go and check that. Any new sentiment is there. If there is any extreme new sentiment, some negative new sentiment, despite the negative new sentiment, price started getting back into the range, which is not a good thing. Right? So there is a clear negative sentiment is going on. Something, some negative news is getting floated. Price broken multi-day high with an ABC elongation. ABC elongation, the single prints got a clear. The next thing is price doing more activity. You can expect some late spike. So make sure that there are no negative informations there. So those are the days where, despite all the negative information, price does a spike. If there is not a negative information, then we cannot anticipate this scenario. The scenario not necessary to anticipate. This scenario might not get played out. Or if there is any negative scenario, but still you want to hold on to the trades, get some cheaper options. By now, 200 call options should be cheaper now. So get it and then get some intraday protection. That's it. Or 195 call if you think. Thereby you will be losing some bit of money, but considering to the amount what you would have been gained, it should be peanuts. If you think so, I'm not saying that you should initiate a hedge right now. So what I'm saying is maybe if you're seeing that our price have got back, more activity started developing over 195, think about initiating some 200 hedge or so. As long as it is not, as long as price is pending below 2-day low, you don't need to be worried about it. But you should be very much aware. Live monitoring is very much required in this scenario. Okay, so a good move is getting built up. I believe it has all the potential to move towards 10,960 levels, either today or tomorrow. Today, odds are there. Yes, they are because of the failed auction. Tomorrow, also odds are there because of AB power high plus an event. So either today or tomorrow, we should be somewhere around 10,960 levels. See, if you want to get these kinds of views, it is only possible if you are able to think from the odd-based perspective, right? With price-based indicators, you cannot clearly say like RSI is above 70 tomorrow, definitely market will go up 100 points. RSI is at 90, definitely this is a momentum market. You cannot say that because it's just a price-based derivative information, right? If you really want to think about odds, that's what market profile and order flow does, right? So when you're thinking about your career, you need to know what you want to do when it comes to trading. You want to follow only systematic approach, you go with a mathematical rule, you do it. There is no prediction element there, right? So here there is a bit of prediction element is there, and there is a bit of high probability scenario is also there. We are talking about scenarios which repeatedly happened in the past, and same set of patterns we are expecting here with a greater confidence. We have a greater context to deal with. We know whom we are competing with. We know what kind of information formed. Based upon the information, what kind of information formed, we'll be able to build a scenario. We'll be able to tell why the market should go there. right? So if you are able to, that's what we call as a market understanding. You know what market is doing, you know what the market participants are doing, you know how emotionally they are reacting. Then only you'll be able to predict such kind of odds where the market could go, why it should top out, why it should bottom out, right? So which one you want to approach? You want to go in an algorithmic way, you can go in a pure algorithmic way or an automated way. Or if you think like I want to know about the markets much, I want to know about this participants much, I can understand their traders behavior. I can able to think in those odd terms, which may look complex, but initially I'm ready to commit my time. I'm ready to do a lot of screen time. I'm ready to do. I want to establish my full-time trading career in the markets. Then those kinds of people should pursue market profile and order flow very seriously, right? If you want to establish a career in the markets, a sustainable career in the markets, I'm talking about sustainable career in the markets, then you should think about market profile and order flow studies very seriously, right? That is what I'm doing for the last 5 years. Last 5 years, every day in and out, I'm trying to measure each and every minor and major market movements to figure out why this, who is responsible for this kind of move, why a short covering is happening in the markets, why a long liquidation is happening in the markets, how the players are getting spoofed, how the other players are, how the momentum is getting initiated in the markets. So trying to get a reason for each and every move there, trying to understand the participant behavior at each and every tiny move levels. That's what our market profile and order flow kind of tools help you to understand the market better. Trading is secondary. First comes understanding. Without understanding, you cannot trade. Without understanding, you cannot have a belief what I should do. Otherwise, you're still going to see the price or price-based information, and you're going to get out of the game. No matter what, how much ever successful strategy you're going to use, unless that belief comes, it requires a lot of screen time to get that belief, right? And markets are still crazy. Beyond that, at times you never know. All of a sudden, market will be doing something freaky, and you will panic, and then you get out of your game. But if you really have the belief, what you practiced over a period of months or years, then only you can stick to the game and you can play the game with a very high confidence, right? So that is which is missing in most of the beginner level trading, which I also missed in my olden trading days. I don't have a systems like market profile or order flow. At least now we have advanced technology based tools. Those days during 2007, 8, maximum we can trade only with the indicators, right? So market profile and order flow are nobody would have been heard of, right? In fact, I heard about market profile during 2011. One article came about the traders.com, where the founder of traders.com is an Indian, and Chitra, I believe. So she written an article about market profile. Initially, I thought like, what is ABC? Maybe it could be something like an Elliott wave, or maybe it looks like a point and figure charts. But it takes a lot of time to understand that it talks. It's not about mathematics. It's not about a trading system. It is not a buy and sell signal. It talks only about the market understanding, and that is a substantial edge involved when you know what kind of participation behavior is going on. This I really learned from when I met Jim. Really, until then, that really changes my perspective. Otherwise, I would be still seeing market profile as a trading strategy, or as an I will be thinking about how to build a buy and sell signal on top of an market profile. That's what initially I approached market profile, right? So rather now there is a radical change in my opinion now, and I would say that one of the fantastic tool to know about markets, first of all, right? So to know about the participation behavior, and there lies the edge. There lies the edge, and there lies the predictability. The predictability is there based upon what kind of people we are competing. Okay, so now come back. So swing breakout strategy, as I said, post the breakout, momentum has to start. That's what we talked about, how a serious momentum could come in. So this explains we talked about the balance breakout strategy, which tells which breakout is a stronger breakout. So that we can, from a positional perspective, we can confirm from the breakout of the balance. From the order flow perspective, we can only say from the current day, right? So whether the current day breakout is good or bad. You'll be seeing a lot of momentum when it is breaking, and after the momentum, you'll be seeing an resting levels for some time, kind of absorption, and again one more initiative drive will be initiated. So that's how the most of the breakout strategy is. So, but otherwise, can I comparing CAN-SLIM and order flow is meaningless, because CAN-SLIM talks at an investing level and order flow talks at an intraday level.
Yes.
Initiative drive. At times it comes at the opening itself. Price opens above the balance and it started doing an open drive. Right. So from the open drive itself, when it is breaking a certain level, if you're seeing a lot of momentum getting generated, then that could be one of the zones. Provided it is not converting into a momentum auction reversal, then that zone could be one of the zones to look out for continuation. The second, one more final strategy, which is called as an absorption based strategy, absorption based range breakout strategy. So this also, we recently haven't encountered any of the recently I haven't seen any such information, but usually it comes like this, like we already talked about in the previous section. So it's like it's kind of a range bound markets. So if you look at the edges will be, it will be like Nifty this could be 10-20 point range. Assume that this is 10,900 and 10,920 levels. 10,920 levels. Okay, 920 levels. And again, price goes in a sideways fashion for some 15 minutes or 20 minutes or 25 minutes. It just moves in a range. But whenever it is moving in a range, you'll be seeing a big buying happens over here and followed by a big selling happens. Again, a big buying, big selling happens here, big buying also happens. So these are the absorption zones. The price at the edges will be absorbed by here. The buying activity will be big, but despite that, selling happens. That's what we call as an absorption. And despite the selling activity, big selling activity, buying happens. And again, price goes back, big buying happens, big selling happens. So a lot of absorption happens at the edges. So a lot of absorption will be happening at the edges, but then price could be here. There'll be initiative drive. So it forms an initiative drive. Here the volume will be reduced, substantially reduced. It will be shallow volumes. You'll be seeing very low volumes, and those low volumes will be followed by a momentum breakout. There'll be momentum breakout where you'll be finding stacked buyers. So in that case, you can go with the continuation. So recently I haven't found any such example, but this is one of the responsive trading action. So you'll be seeing a lot of responsive action at the edges. The responsive action will be followed by so here responsive action here, responsive action here, responsive action here, and responsive action here, responsive action here. So all the other places you'll be seeing a lot of responsive action and followed by a initiative drive. So this will be followed by a initiative drive. So in that case, one can go with those initiative drive. So from a 5-minute time frame or a 3-minute time frame, one can practice this strategy, right? So, but recently I haven't crossed through any of these examples in the recent days. Maybe if anything comes around, we'll try to take those information. But these kinds of things usually happens in a very tightly compressed markets. Second half market makes a move, something like this. Throughout the day, market will be doing something like this. And one more strategy, similar. This strategy we call it as an absorption-based strategy. So this is purely absorption based range breakout. It develops a range. If you look into the range, you'll be seeing a lot of momentum sellers there, momentum sellers and momentum buyers at the edges. If there is no momentum buyers at the edges, then we call this just a consolidation. It's not an absorption, right? So if you're seeing a lot of white candles which are coming in without any imbalance, then they are just consolidation. Price is moving in a range, that is consolidation. Whereas if you're seeing bigger volume coming at the edges on both the sides, it is absorption. In that case, one have to wait for the breakout to happen in the form of a responsive auction has to convert into a initiative drive. So that is where one can think about playing such games. And the second thing is like, another one is a kind of a cheating strategy. It's a pure intraday game. Probably many times you might seen that. This month also happened, but I failed to record those information. So it was like, this is a day low. This is day low. Price would have been went up. Day low. So it just comes down and it keeps going up. It gives the impression that the markets are nothing to do with the day low, but everyone might be placed their stops below the day low. So most of the stops would have been placed down below the day low. Right, most of the small traders would have been placed their stop loss in this band. So some people use day lows plus 2, day low plus 5, day low plus 10. They use that kind of filters, right? So what market does is that eventually it comes and breaks, and then it triggers a lot of liquidity, and then they come back and they close here like rally high, and maybe at times it could be even much a little bit bigger. Next day onwards, they continue the rally, they completely goes up. So one such case which happened recently, the same within the balance on 29th, I believe, 29th or 30. If you look at the 1 minute charts, somehow on that day I'm not able to get that order flow chart, so I missed this case. Otherwise, it's one of the fantastic information to. So I'm going to remove this balance. So here is the day low on that Jan 30th. Jan 30th, here is the day low. And you can see here is the day low. Day low formation over here. Right. And a lot of stops could be sitting in this band. So below that, there could be a lot of stop loss could be sitting in this band. As I said, T plus 5, day plus low plus 5, day plus low plus 6, 7, 10, all stop loss will be lying in those bands only. So everyone would have been went long, and most of the stops would have been triggered here. Most of the people would have been panickingly exited over here, right? And one of the plays, most of the short-term players give up. Day low is done. Oh, it's weaker. The day is gonna be turned bearish. That's a common belief which runs under the trader's mind. So if we fail to look into the context is still we are inside the balance, right? So if you fail to think about that information, that we might be missing the game here. So you see the crash was coming. It was a relentless crash. It is like the blue jacket guy who is coming and shorting the markets. Every short-term trader runs away. It triggers a lot of liquidity. All the buyers turn into sellers. That's what this kind of crazy crash market happens. It makes, in fact, you can see the similar crash. The crash was relentless. It's slow and steady. And you can see the crash, the way the price is crashing. It is relentless. It's just one way. It just keeps crashing on a 1 minute time frame, right? But despite that, markets are able to come back into the range. When it is come back into the range, it comes with a momentum. If you look into that particular day, it comes up with a momentum. So momentum candles. If you look at the order flow also, there should be a lot of stacked buyers coming in this zone. And finally, this is also part of a failed breakout strategy. It's the day's low has been broken out. Once it breaks out, you'll be seeing, and from what you'll be seeing from the order flow is that you'll be seeing a lot of absorption. All these are absorption followed by a reversal initiative drive. This will be the initiative drive. If you look from the order flow perspective, if you go and check back on your order flow charts. I don't have the information on Jan 30th, but still looking into the order flow also meaningless because Jan 30th is an T+2 from expiry. So, but if you look into the order flow, this could be one potential initiative drive. They would have been started from here. You would be seeing a lot of absorption here. You can see it is convincing the people that it is a kind of a resistance. It is convincing the people that every time price tried to shoot up, it got rejection, shoot up, rejection, shoot up, rejection, shoot up, rejection. And now here, this particular candle, that particular candle should, at the key reference level, it's one of the key reference level, right? At this key reference level, you'll be seeing a lot of momentum coming in. That momentum comes in the form of an initiative drive. The initiative drive starts from there, right? So that is a key signature that this is a breakout failure. This is a breakout failure. So maybe they are not serious sellers. So the combination is that you'll be seeing a lot of absorption activity once they take the day low. Absorption means all the selling activity will be absorbed by the buyers. The buyers will be smartly absorbing in the form of a limit orders. Buyers will be reloading. We call that as a reloading. They'll be reloading in the form of a limit order buyers. Whereas aggressive players will be the sellers there. Sellers will be keep on selling. But the entire liquidity providers, the buyers will come and supply the liquidity there in the form of a limit order. Right? So the buyers will be supplying the liquidity in the form of a limit order. And then once the liquidity is over, once all the aggressive selling is over, they absorb everything, and then now they make the move in the form of an initiative drive. This kind of activity you can find frequent. At least in a month, you can get some 3 or 4 such activities. In a month, price keeps on going up, and all of a sudden, price crashes intraday. It crashes, and it makes everyone to believe that the price is about to go down, but then it comes and closes very close to the center, or something like that. So it will be a kind of a fake breakout. So these kinds of fake breakout, you'll be able to identify very faster when you are using tools like order flow. Whereas if you're going to use price-based information, you may not get the context, what kind of context is going on right there. But if you're able to use order flow, you'll be able to figure out that the zone is completely dominated by the absorption by the buyers. Absorption by the buyers. So once you know that absorption by the buyers, at the same time, you can also see the momentum exhaustion happened over here. The momentum exhaustion over here on this candle, there is a momentum, kind of an excess on a 1 minute time frame, momentum exhaustion, and price getting back into the range with a momentum, stacked momentum. That's the key, that this is not a serious selling activity, right? So these two combinations, one should be able to gauge by 10,620 itself. So one should be able to position themselves in a much better game. So what happened on that day is that I took a long here. I took my long here. So it was an ABC elongation, kind of a price got into in the form of an ABC. So it's an ABC inside, ABC back into the range, ABC back into the range. So I took my long trade over here. I took my, when the price is there, when I seen this kind of upthrust, I took a long here. I was holding, I was hoping for a breakout. I was expecting about 10,700, that should be a breakout, should be coming in, right? So what we done is that breakout haven't came, but when the price started selling off, before we thinking, almost within 15 minutes, everything has been over. So I have to close my positions again here because of call options. So a lot of options volatility because of the gamma factor, right? The option value has been eroded. We bought at some 23 rupees option or 22 rupees option. It become 14 rupees when it was coming over here. Same price level, but option price got eroded. And again, we took an long. We again initiated a long here around this time at a different strike price. We took around 33. The one more at very close to 10,700 level, and then we managed to close around. Sorry, not 33. Should be supposed to be 45. 45 and closed around somewhere around 55 or levels. So nothing much. And the very next day we came for the very next trade. The very next trade is where the expiry trade had done there. So very next day we got a gap up, but still we played the same game even with the gap up, and then now this time 10,700 price broken out. This time I took the trade over there. Right? But this for me, this is also a surprise moment. It's a surprise moment, and it's a beautiful moment as well when it comes to, if you look into the order flow and market profile, because this is where all the unfinished business got a clear. All unfinished business which got generated right from here, 1 and a couple of things here, 2 and 3 and 4 and 5. Almost 5 levels it got generated. All the levels got a clear at the morning. It almost all the 4 or 5 levels it got clear. Only one level, this is the last level which was missed, but still price this break, that also it clears those references and then comes back. So but still the overall context was kind of completely bullish. It never changed overall, despite that crash was kind of fearing crash, but then still I managed to learn that quickly. This is not an fake breakout, so again I have to initiated the long, cover up my old losses, and again I got back into the profitable mode there. So that's how most of the game will. You're not going to understand each and every movement in the markets initially. Maybe over a period of time, over a period of screen time, and over a period of screen experience, your understanding about the markets, it's only going to go much better and better and better. What has been happened in the last 30 days is that my last 5 years of experience, my last 5 years of my intensive observation has been transferred to you. That reduces your learning curve from 5 years to 1 year. Right? At least you don't need to spend 5 years of time what I spent. Your learning curve has been shortened up by 4 years. Whatever the observation I learned, I had seen many mistakes. I know that this is a mistake. It's a mistake, right? So I learned in a self-taught way. Whereas in your case, it's going to be you're not going to struggle much. But still, somewhere you need to start your screen time. Start focusing on now. So now, next 1 year you'll be a different guy. And another 3 or 4 years from now, you'll be one of the most professional trader. That's what I believe, right? So somewhere you need to start looking into the markets with a different perspective. Otherwise, you're going to think like everyone is going to think, and that is why you're going to lose your trading edge. And to use market profile and order flow, it's not everyone's cup of tea. It is someone's cup of tea unless they are only if they are willing to dedicate themselves to the markets and to trading. And unless it cannot be it cannot be a time pass. Market profile is not a time pass. It's only for serious players. Okay, so that's absorption based range breakout strategy, where absorption around the edges, followed by initiative drive, or we can also say followed by initiative drive or a breakout from the balance created by absorption. And so these are the strategies. These are the 13 strategies which we'll be monitoring on day-to-day basis. And there are a couple of other strategies we are experimenting. So as of now, we need more confirmation. We need more screen time over there. A lot of strategies we are monitoring, but that doesn't mean that you have to trade each and every strategy there. So the strategy which is having the maximum edge, if you ask me, the momentum auction reversal has the maximum edge. Unfinished business, at times it gives you maximum edge. R delta gives maximum edge. And unsecure high and unsecure lows, they are just information. You cannot play this as a strategy, but you can. It tells you what kind of context, what level you can anticipate, why you should anticipate. So combining with other odds, this information has to be combined with other odds to ensure that the day high is secured or not. And one more strategy. This also have a greater. It's kind of an absorption strategy. This one is the trapped. We call this a trapped buyers or sellers, or trapped sellers. Right. So we already talked about this. So where in this case, it's also kind of an unsecure high. It also similar to unsecure high or an unsecure low. Whereas an unsecure high or unsecure low is just an information. Okay. Whereas when the market is, let's say the markets are selling down and the day low, you're seeing some big volume happens over here. So one of the, let's say, 3 levels here, bottom 3 levels. And let's say it's showing like 10 in Nifty. Assume that this is Nifty chart, and here it says like 1100. Instead of, we are having a big buying at the day low. This is day low candle. Price is approaching day low. A new low for the day has been done, and let's say 20 and 30, right? And then, so you'll be seeing a big seller order over here. There will be a big sell order over here, and so this is selling side and this is buying side, right? So let's say here some 5 and 0, 0 and 0, and let's say 10 and let's say 25. So if something like this is happening, bar closes, this bar closes over here, and next bar started moving in. So then in that case, initiate a trade here with stops at the day low. Initiate the stops with the day low. Expect the mean reversion. Mean reversion comes towards VWAP levels. VWAP. This also we already seen multiple examples. VWAP levels. Maybe I'll show you if any of the videos are there. But once the VWAP is done, it's good to get out of the game, because the low here, it is just 2 ticks or 3 ticks away from the day low. The big order is not at the day low. Big order is very close to the day low. Usually it will be temporary momentum longs, but eventually they will get it. Either the same day or next day, very next day they will get those reference low, because it's a bad it's a bad low. A good low will not have such kind of big trading activity over there. So that is a bad low. So in that case, it's an immediate scalping long with the tight stop loss. Here you can manage a tight stop loss. It also gives very good trading opportunity as well. But eventually, it will mean revert back. So the upside odds are closely 75% with a decent swing zones, and the reversal part is 100%. They definitely come for a reversal, right? So, but you never know how high they will go. The problem is that you never know whether they will go this high and then they will come back, but definitely they'll come back. Or when they come back, you never know, right? Maybe they may come back in 2 days or very next day or the same day itself they can come back. Definitely they will come back, right? So maybe this will have a greater odds. Even if you don't want to put 100%, you can still put 90%. That's the auction behavior, because they will come back, because that's how the auction behaves in the markets, right? And this has a greater odds over here. 70% of the time they do a mean reversion exactly precisely from there with a tight stop. So that is why you can take a very tight, risky trading strategies over there with an 5-point stops or 6-point stops. In that case, you have to wait for the bigger order flow to come in at the day's high or a day's low. But no matter what, how much ever the bigger quantity it is, if the quantity is in 1,000 lots or 2,000 lots at the day high, are pretty close to the day high, those have the higher odds of revisit. Right? So let me save this document. Save as. Order flow trading strategies. I'll be mailing you this document as well. And at the day's edges, it's a responsive trading. Look for mean reversion towards VWAP levels. Right? Any other questions? I guess with this, we are almost done with the order flow trading strategies. If you have any questions on market profile, you can ask me. Market profile or order flow.
Yes, Rajendra. I have a question. You said high volume on day high and day low. You said no. Can we guess that in the market profile rather than order flow?
No, you cannot. Yeah, you can guess. Because there is a feature there. What you can do is, if you go to Nifty future, right click and go to indicators. I mean, by default, I currently disable here because I used to look from the order flow. Same thing, information you can get from the order flow as well. You have to enable volume profile. Scroll down. And this is available in the basic version also, so not a big deal. So show bid-ask histogram, show total tick volume, show left price area. By default, all these three values will be enabled. But the only thing is that you have to set the data collection type as a tick level. Right? So once you're done with that, you'll be able to get the exact order flows, absolute value of the day high and the day low.
Okay, for this, in a recent chat, my complete data was not reloaded. Only first ABTP was reloading for that one. Full data is not reloaded in Ninja Trader.
What data feed you are using?
That was 2 data.
Maybe you might enable this. You have to enable tick replay first of all. So go to data series, not data series here, but go to your control center. Otherwise, you may not get the data. So you have to enable tick replay. So you have to go to tools, options. You have to go to market data, and then you have to enable these two information. Show tick replay. This you have to enable it. Then only it will start recording the ticks. Then only you'll be able to get it.
Which one this is?
Show tick replay.
Okay.
From tools, options, market data, and then show tick replay.
Okay.
And the one more setting, I believe, what is that? Market recording for PL, playback. That also you have to enable it. In that case, you'll be able to get such information. Yeah, any other questions?
So I have a doubt on TPO settings.
Yeah.
So I'm trying to use it for the US market.
Okay.
So how can I put those the TPO setting for those things?
So let me open for the US markets here. So I'm going to close this chart. I'm going to look into US markets. Right. So I'll disconnect all the feeds, disconnect e-signal, I'll disconnect global data feeds, and connect to Kinetic. Okay. Meantime, I'll close this data as well. I'll connect to my Kinetic. If you're having connectivity with my Kinetic or CQG or the US vendors, even e-signal you'll be able to get for the US markets or IQ feed.
Yeah, IQ feed I heard up. Yeah.
So let it be any data feed, and then ES. Okay. Yes. And let's say 30-minute time frame, everything is same, and press OK. I already have a template with me, but still I'll explain what are the settings I had done in the template.
Okay.
So if you understand ES mini, the ES mini tick size, minimum tick size is how much?
I'm not sure.
You're not sure. Okay, 0.25 is the minimum tick size. Okay, so means each and every block is a 0.25. There is no minimum 0.05 movement. We will be see like 0.25, 0.50, 0.75. That is a minimum tick. It is possible in ES mini, whereas S&P will be having an spot will having an 0.01 movement, whereas ES mini is 0.25 movement. Minimum possible price is only 0.25. Okay, so right click. We'll be using only one TPO for ES mini. So you see that TPO size is 1. That is the only settings. The rest all the settings are same. And one more setting here is that in US they have 2 sessions. One is an electronic market session, another one is an regular market session and overnight session, right? So when I am studying profile, they have one more additional layer of complexity. They have overnight markets. So they have 2 profiles coming in. So one is an regular market hours. Whatever you're seeing here is a regular market hours on 4th February and 2nd February. If you plot a candlestick, you will get both regular and overnight. But I don't want overnight for my day-to-day analysis or my positional analysis. Why we don't use overnight market is that in the overnight markets, only the weaker hands come into the play, right? So who comes and plays the overnight market is mostly the people who are coming after a job after 6 o'clock, or the people who are working somewhere else and they want to speculate in the markets. Most speculators and small traders come and compete in the overnight markets. That doesn't mean like institutional presence will not be there. Institutional presence will be very, very less because they don't get the liquidity in the overnight markets. Most of the liquidity they will get only during the regular market hours. So institutional presence will be very less. Even the market providers, liquidity providers will not be there. That is why most of the overnight markets are crazy swings. But most of the time it is controlled by the overnight, weaker hand players. So 65% of the time, if everyone is long, for example, let's say this is my regular market hours. Regular market hours, price does something in my regular session. And in the evening session, so let's say price closes over here. In the evening session, the entire overnight markets are completely traded above that, right? So, and price also ends higher. Then we say like the overnight inventory is long. The overnight inventory is measured from the previous closing. From the previous closing, if you see that all the activity has been built higher, that means overnight players are 100% long. That's what they say. If they are 100% long, then most of them are weaker hands. When the S&P opens, S&P lately you'll be seeing a late correction, and there'll be immediate correction. You'll be seeing that's the market opening. You want to see if they're 100% long, there is a 65% chance. This is the observation from Jim. He had told in many of his public webinars. So what he says is that 65% of the time, if the overnight inventory is long, then there is a 65% of the chance you can expect a correction against all those overnight players. They will use overnight high and overnight low as a reference. So this is assume that this is my overnight high. So they call us an ONH. Many people, they use ONH. That means overnight high. And this is overnight low. Overnight low. So in that case, if the price is opening here, it will be looking like a gap up to you. So my previous day closes here. My previous day closes over here, right? So next day regular market hours is opening here, and my overnight high is over here, right? So price opens gap up. Gap up is a good sentiment, it's right. But if it is coming back into the overnight range, right? It's a kind of a low confidence environment. So there is a correction. There is a possibility that they could correct. In that case, the gap could get closed, right? So it's kind of an overnight high. Look above the overnight high and fail, that kind of thing. It does an overnight inventory correction. We call this this correction, they call it as a overnight inventory correction. All the overnight players who went long are thinking that the market is going to go up, but all of a sudden you see that there is a steep crash coming into the markets. Who liquidates here are the overnight players who went long, who are long in this zone, these entire zones here, right? So they will come for a liquidation. They are the one who are the first people to liquidate because they are short-term players. They're short-term players. They liquidate because at times some news would have been triggered. News will be bullish, but despite bullishness, they'll start booking profits, and then you'll be seeing that sharp crash in the markets. So again, that is a different study. As of now, for Indian markets, we don't need to worry about overnight highs and overnight lows. If at all tomorrow overnight highs and overnight lows is going to come, the same thing we are going to continue, but still we will be looking into only today's overnight high. We will not be much bothered about what the previous day's overnight high or 2 days back overnight high. We are not bothered about it. But if you are an intraday player or a scalper, you should take reference level from overnight high and overnight low also. That gives you tremendous odds again from an intraday perspective, what the overnight the players had done. And yeah, that will be a different game. Definitely that's going to be a different game. But yes, market profile has a way to deal with those in kinds of informations as well. And we are having a back-to-back we're having a back-to-back prominent point of control, kind of back-to-back prominent point of control. So inventory is kind of went long to too long. So one of the
trade ES Mini?
I'm an Indian resident. It's illegal to trade ES Mini here. But I do observe.
Okay.
We can trade ES Mini by opening account with interactive brokers, but they still say that it's a gray segment. RBI has an LRS liberal remittance scheme there. So, but still, it's still kind of an anything you are doing in an overseas market margin trading segment, it is illegal as per the RBI FEMA documents.
Okay.
FEMA means what is that? RBI, I just forgot that.
Foreign exchange management.
Yes, exactly. So that regulation, according to FEMA, you'll be violating their FEMA norms. So they have the access to block your credit cards, your bank accounts. As long as you're doing in a small way, it is good. But if you're dealing with a bigger size, you may end up facing the court, or you may end up your bank accounts might get frozen. So Foreign Exchange Management Act, right? So the rules clearly says that you can invest in foreign exchange shares, like something like an Apple you can go and buy, but you cannot do an intraday trading because it involves leverage. Anything which involves leverage, you cannot invest other than Indian exchanges. They are pretty clear, right?
Okay.
Yeah. And there is one more new thing is going to happen. Any idea what it is? Something new is going to happen from February onwards.
Nifty Weekly.
Yes, exactly. That's Nifty Weekly. And there lies something interesting over there because it's a new product. Whenever a new product is introduced in the markets, what generally happens? New product comes into the market, new trading instrument. Like Nifty Weekly is getting introduced. Then what generally happens? When a new product is getting introduced in the markets, exchange needs to promote it so that because they want liquidity. More the liquidity is that, more the turnover for the exchange, that is going to be the profitable thing for the exchange. So if you want to promote Nifty Weekly, you need more speculators. If you need more speculators, first you have to attract more speculators by showing that there is a profit. If you trade Nifty Weekly, you can be profitable, right? So that's the exchange business, and exchange might try to bring some liquidity. So they'll have a liquidity providers to supply some liquidity. Initially, product will be exotic. And it drives a lot of speculator inside. So means that kind of things will happen only if the options double, triple, or 100 times, 200 times, 300 times. Then only the trader will talk to the other trader. Hey, you know that Nifty futures, the so-and-so strike price got 5 times or 10 times or 20 times. Then only it attracts speculators into the market. Then only the speculators will be interested in betting in those instruments. So later part of once the speculative action happens, then the volatility gets reduced. So now what we can expect here is that we can expect a tremendous expansion in the IV, so that the Nifty weeklies will be doubling, tripling. Those kinds of actions will be happening for at least in the next 1 or 2 months. You'll be hearing some good stories that Nifty weekly so and so call option doubled, so and so put option has been went 20 times, 100 times. Those kinds of auctions you'll be able to see because a new product is coming in. That's how the Bank Nifty weekly has been introduced. When it introduced, it's the same thing. Sometime back, they introduced a new product called India VIX futures. Now it is no more, right? So when the Nifty India VIX futures, it's a weekly futures they introduced. For the very first time, they introduced weekly futures, and by that time when they introduced the product, I think the VIX was around somewhere around 14. It went to 28. The exchange knows when the volatility is most likely to come. So maybe they know this is the right time to introduce the product. By this time, the speculators might be attracted. Right? They don't try to do any gimmicks. They don't try to manipulate. But they know when, at what time, what season they should launch the product. Right? So maybe they are announcing at the right time. If I believe that, they can do a solid business over there. It's a win-win situation for the exchange as well. And so volatility is most likely to wobble in the upcoming days. You're going to see a more crazy ranges. All of a sudden, you'll be seeing a deep crash followed by a deep recovery. Maybe there could be a 200-point crash intraday and then a complete 200 points recovery in Nifty, or a 400 points crash in Nifty followed by 250-point recovery in Nifty. That kind of crazy movements could be happening in the future once the new product is about to launch. And now this but then lately this product haven't gained much of attention, India VIX futures. That is so sad. But anyways, there is no exchange is not able to drive liquidities. They stopped the product. Recently they announced the CME exchange, right? Chicago Mercantile Exchange. They announced Bitcoin futures. Anyone remembers the date when exactly it got announced? It's precisely at the Bitcoin top. That day is the Bitcoin top. That's the Bitcoin top so far. And you can go back and check when the Bitcoin futures are announced. The very first tick was at $2,000. I mean, 20,000 USD, right? So, and that day onwards, there was a lot of volatility. Every day, the Bitcoin moves 2,000 points up and down, 3,000 points, 4,000 points up and down. A good volatility has been created. More people came to trade Bitcoin futures. I believe now there won't be much of liquidity there because people might lose interest in that product because Bitcoin futures itself not exotic anymore. The volatility has been came down drastically. Maybe they might use this as a hedge. Maybe they might use this as the institution might be used as a hedge to protect their investments. So the speculators might be willing to play a directional game. That is why the speculators love it, because it's a leverage game. Bitcoin previously it was not a leverage game. Right now they can do intraday trading, intraday futures, positional trading. That's how the speculators comes and play the game. Whereas institutions use it to hedge their Bitcoin positions. Almost many hedge funds entered into Bitcoins off late, and they might use as a hedge to protect their gains, what are the gains they got. Whereas speculators would have been lost both the ways. Because of that kind of volatility, nobody can survive. So the key lesson here is that whenever a new instrument is going to come into the markets, exchange knows that there could be a possible volatility. That is why they are introducing the products, because that could bring them. Exchange also allowed to make money. It's not only the brokers are making money here. Exchange makes more money than the brokers, because almost every broker are connected to the exchanges. So exchange knows what product will suit investors. They do a lot of research when they are introducing a product. They will understand whether what is the mood behind the speculators. Will the speculator come and participate? Will the institutions come and participate? Will any other institutions might be willing to trade this instrument? How much business it attracts? They might do all sort of ground study before launching this kind of products, right? So I believe if at all they had done a right research, they want to push the product at the right time when the market is showing volatility, right? So probably that's one key sign that the volatility is going to be drastic, at least for next 2-3 months. which gonna pull more Nifty speculators, Nifty weekly option speculators. As of now, so far they speculated on Bank Nifty. Now more and more people will start speculating on Nifty as well. So maybe Bank Nifty may not be that volatile compared to Nifty. Nifty will be even more exotic product for next 2-3 months at least, right? So trade with caution. That's what I'm going to say if you want to trade in futures. So there could be wild, crazy swings. Every day the options could be double, triple, but end of the day nobody gets anything. That's different. But if you are, you will be seeing that options will be getting double, tripled in the off late. And one more thing, doubling your money or tripling your money is not a great deal. Identifying the top one, identifying the bottom also, it's not a big deal. What matters here is that the intermediate play, it's going to be really difficult. That is where you need to learn to manage how I'm going to achieve, how I'm going to, whatever the capital I had, how I'm going to protect it. That's the thing. It matters. So then only it makes sense whether your money is getting doubled or tripled or 5 times or 10 times. Those kinds of things always happens in the market. If you're going to be in options, one day you would have been double your options or triple your options. But if you look into the number of frequency, that number of frequency of achieving those are very, very less in numbers. That you have to keep it in your mind. Every option game is not going to be a double. Every other option is not going to be a 100x trade or a 200x trade. So you need to know what is the right opportunity, what the market is throwing. Accordingly, only you have to play. Accordingly, you have to strategize your game. Otherwise, you're going to live in an unrealistic world, and we are going to take unrealistic strategies, and then every time we're going to disappoint ourselves that why it is not happening, why I am still losing, why things are not going in my favor. That kind of questions always remains, and we keep jumping from one indicator to another indicator. Today it will be market profile order flow, tomorrow something else, tomorrow point and figure charts, and tomorrow something else, and the life keeps on. We'll be still round circling in only keep rotating in circles, right? So basically we'll be at the square one only. If you want to move forward, try to have as much as market understanding as much as possible. That gives you great clarity in your trading, in your execution, a different style of thinking, better than the crowd-based thinking, and possibly a sustainable trading career. Right? Okay. Any other questions?
Sir?
Yeah.
For long-term stock buy based on market profile.
Yeah, you can do that. That's what I recommended Lupin. Right? So Lupin sometime back. So I just get you the yearly profile of Lupin. Say like Twitter, Lupin, yearly profile. Sometime back I posted. I'm not sure whether they have it or not. Maybe I'll try to get from TradingView. We already talked in the older sessions, but just give me a second. Let me pull up if I'm able to get Lupin. See, sometime back, Jim Dalton traded real estate using market profile information. So it can be applied with the same concepts there. The confidence, instead of daily high, daily low, we're going to monitor the confidence around previous week high or a previous month high. So the confidence is not at the investors level. The confidence you have to monitor at the day high or a day low. Instead of using day high, day low, you have to focus on higher time frame, probably at monthly levels or a weekly levels, to understand the market confidence. It's slightly a bigger game. Instead of 30-minute charts, you have to use a daily charts as they are profile charts. Right, so the same thing can be practiced, but one step at a bigger level. Instead of a 30-minute time frame, we will be using a daily chart. So in a month, you will get 20 letters So every day 1 is letter A and day 2 is letter B. Like that, it keeps going on. Likewise, if I try to plot a profile, if at all I try to plot a profile here, just give me a second. I think I have access to volume profile. I can show that. Indicators, volume profile. Yeah, I have access to fixed range. Let's say 2017. If I try to till December, so I'll be getting an this is just a volume profile. But if you look into the market profile, it looks like something like an something like, just give me a second. If you look from the market profile, maybe I'll show from the Ninja Trader, I mean AMI Broker, because I have a price-based charts here. Lupin, you can go to daily time frame. I'm going to put a yearly profile. Okay, so let me, I think I have it under basic charts, not this one, probably backups, backup formulas, basic charts. Market profile with VWAP. I think this is the one. Okay. So here I have to select base as an yearly, so that I'll be able to get an yearly profile. And same, this is a price distribution. Wherever you're seeing a higher histogram, that's where the price, instead of letters, it is shown in the form of an histogram, right? So in that case, you can see, and the point of control is over here. So here is the point of control, the purple color line or the violet color line. Here is the point of control for this year, 2017, right? So what is happening here? Price is going down, but more activity was spending over here. More activity was spending over here. So what does that mean? Can anybody say what does that mean?
Price can reverse back to the POC act as a magnet.
Yeah, that is fine. But what is happening here? Who is what kind of players who are selling here?
Weekends.
No, it's momentum sellers.
Oh.
All those momentum sellers are long-term sellers who are already holding their liquidity. They are just getting out of their portfolio.
Okay.
And long-term sellers, I mean, once you're a buyer, next year you're a seller, right? So all long-term sellers are exiting their positions in Lupin, and the one of the plays when the point of control is not migrating, only price is migrating down. Long-term sellers are getting short to too short, or they say like most of the long-term players have got out of the system. Now almost it's kind of an inventory. Inventories at the extreme. Most of the players got out of the system. Now we also got a balance in 2018. In 2018, it's all about a balance. We got a very bigger balance here. Now, even if you look into that, last 3 months we are closely moving in a consolidation fashion. It's kind of a very tight balance is what going on, and so far the auction is building higher. Currently, Lupin is at the current year high. Right. So the thing is that price has to mean revert towards the point of control. Where was the point of control?
1450.
Yes, which also matches with our gap zone, weekly gap zone. You remember?
Yes.
Yeah, that is the only reason I'm bullish on Lupin.
Okay.
I'm not bullish on markets. I'm bullish on, but I'm bullish on Lupin. Right. So just this game to evolve. When they're coming, they really come and clear faster. You see that this kind of a structure, it's a kind of a poor structure with a lot of anomalies. Right? Emotional selling. It's more of an emotional selling from the participants. It's the same game, but at a very higher level. That's the thing. Right. So even 2008, when last time 2008 came, if you try to plot a profile, the same thing happened during 2008. 2008, there was an point of control here, and lately only price is migrating higher in the second half of 2017. So 2007 profile, if you look at the 2007 profile, this point of control was at somewhere around 4,000 levels or 4,500 levels. 4,500 levels, and within 3 months or 4 months, price went to 6,300. Right? Only price was migrating because that's an emotional buying activity. And January month, straight away they crashed to 4,500. So the liquidation came. Whoever went that emotional long, whoever tried to catch that emotional long, they liquidated. Same thing happened in Bitcoin also. But the thing is that it took a more time there. But eventually they came back into that range. And the same thing happened in HEG also. HEG, if you look at HEG, you know what is HEG, right? If you're investors, you know what is HEG. You don't know the graphite electrode company? Okay, maybe you don't invest much. Almost every investors know that HEG because it's going really crazy. It went from 200 rupees to almost 4,000 rupees because China banned graphite electrodes, and graphite electrodes company production is only done by 2 companies. One is graphite, another one is HEG. So if you look into that price structure, right? So the price structure is that more activity happens over here, and lately more people are trying to catch an momentum. All are momentum players over here, and what just we are witnessing is that all those players who went long, the long-term investors itself, they went long to too long, and now what we are seeing is a serious correction, and that fair play is towards 900. This will not stop until it goes around 300 or 400 levels. They'll be eventually go back to the previous levels. So if you draw a market profile there, you'll be seeing that one of the places where the inventory is getting long to too long, that kind of scenario. And same scenario we seen in Bharti as well. In fact,
okay, sir, can we draw in Ninja Trader Bell TPO, sir?
Yeah, you can draw it. You can take a daily chart, and the only thing is instead of minute, you have to apply days.
For TPO size, sir?
TPO size, it doesn't matter. So it will be converted into blocks. So you can keep any, maybe 10 or something like that. You can keep it if it is Nifty, or if it is stocks, you can keep some 2 points or 3 points. See, but they are not trading opportunities. They can be good investing opportunities. You cannot use this information to trading because trading.
No. For investing only, I am asking, sir.
Yeah. But we also attempted to take a trade in Bharti Airtel. This is one of the year here in 2017. If you draw a market profile here, you'll be seeing more activity happens in this band, where more price touched more times in this band. Balance got created over here, and lately price shooted up. It was a kind of an point of control is not migrating. Lately, only price is migrating.
Price only migrating.
Yeah. So this is a crash which resulted in that, and we talked in our old session as well why Bharti Airtel could be returning back to 360 levels. So in fact, it does much below that, and again we try to trade it. We are not able to trade it, so I left this one. But what I traded is a Tata Steel, which had a similar structure there. In 2017, I can see that only if you know the balance. Maybe I'll pull up the balance here. Tata Steel. So Tata Steel -I.NFO. So you can see that point of control is here and only price is migrating. Right. So we attempted shorting here at around 720 levels. We have to manage this Tata Steel for some time because it went to 750, 720. We carried only one lot, and there was a crash. Again, we re-entered. Again, there was a crash. But then our expectation was towards this 492 levels. It's 492 levels. You can see price is coming and touching the prominent point of control precisely, and they are moving up. That is again a weaker reference. Still, that again got cleared now. So the same rules, everything is same. All the logic is same, and the only thing is that it's a one-step higher game. So now, if you look into the Nifty, if you want to take a view, you can only use it as a view, but it's not a good execution part when it comes to lower time frame trading. But you can always good to have a view. So far it's kind of a low confidence session. We are still trading inside the previous day's range. I mean previous year low and previous year high. Price is still balancing inside this range. Still, as per that, if you are an investor, like I'm talking from an investor perspective, you should be waiting over here, not to take any trading decisions. Maybe let's say more balance is happening. Or if you look from the past, the value area was developing higher. So value area never developed lower. The blue zones are the value area here. So it's a high value area higher, value area higher, value area higher. It was overlapping for 1 year. It was higher. It was higher to overlapping. And now so far it is overlapping. So what if this year we are going to see a value area on the downside? So in that case, they have to break the week year low, and they have to do a lot of activity on the downside. In that case, value area have all the odds of shifting down, and that is a high probability. So based upon the other circumstances, we can say that this year possibilities are there that they're going to break the last year low. Right. So last year low comes around 9973, if I'm not wrong.
9960.
9960. Maybe in futures it is 9973. In spot it could be 9960. You're looking into spot or into futures? It's 9973 somewhere, because I was during that time I was in one of my trade by that time. So higher time frame, it's a low confidence. From an investing perspective, there's no real confidence in the market from an investing perspective as of now, right? So at least price is also now it's trading still inside the previous value area zone. So no real confidence from the buyers and no real confidence from the sellers. That's what we can understand from the January trading activity. So far there is no such stuff. So that means still there is no focus from the investors. If there are serious investors right now there, they should have been attempting to build value area higher, at least in January or in February month. So that means if any seriousness has to happen, first they have to break the 11,000 level. Then we can say that. Otherwise, still the focus is still on the downside. And there is a potential top setup formed on last Friday. We can confirm a possible top in two ways. One is by looking into the balance and the excess. Let me put up a daily chart here. So if you are bringing up a daily or a hourly charts, you'll be seeing a broader balance here. This is a broader balance. This will be clearly visible even from a hourly perspective. Hourly perspective, we had a broader balance. So this is the balance which was running for almost 1.5 months. It's a very big balance. Now, last Friday was a kind of a look above the balance and fail, which is not a good setup. It will not be a good setup. If it is a good setup on Monday, what happens is that price has to open here and they have to take a drive. If that is really missing, price started inside the balance, they'll be mostly tend to go down. Initially, it's kind of a look above the balance and fail. The immediate auction, that price goes to the other side of the balance, which is again retest of 10,600 levels. And I'm saying that it has a higher odds because price has the higher odds of moving down. The reason is there is an AB poor low also got formed. Maybe I'll close and reopen Ninja Trader. Maybe I'll be able to show you what happened in the Nifty February series. So and if you look from the daily perspective, that daily candle is an excess. You can see a excess which is coming at a major swing high, which is possibly the end of the one auction and the beginning of a new auction. That's a clear excess. It's a clear trend followed by an excess. And now what we need is an follow through. A follow through has to come over here, which also breaks the balance on the downside. Acceleration, the consequences are very dangerous. The consequences are going to be very dangerous. One potential place where we can expect a market top. I'm talking about a market top here. If at all it has to be invalidate, the 10,000, 11,000 levels has to get invalidated. Price has to start moving above that. In that case, the game changes. Maybe something else is going to happen. But as long as that it is not, it is going to get protected. So it comes on an even day. First of all, it comes on an even day. Most of the even days are possibilities of a top. And along that is not the only confirmation here. I'm also taking confirmation from the open interest data points. So most of the time, open interest data points gives you such kinds of odds at the day high. I mean, at the market tops or at the market bottoms. So 11,000 has been restored as the highest open interest in calls. If you look into the PCR, still PCR stays at around somewhere around 4.58 or something, 4.5 or 4.8. This range is still maintaining below 0.5. So Monday, if this open interest drops to less than 0.4, less than 0.4. Now the current PCR is somewhere around 0.45 or 48. I'm not very sure, but last time when I checked, it was somewhere around 4 point something, 0.48 in this range. It is there. But if Monday we are seeing this open interest is going to drop 0.4 or 0.38 or 0.36, and the price is also going to drop, which is the higher odds. And there are more possibilities that this could be the start of the correction, right? So we've been waiting for such kind of setups. The setups came with an event. Definitely event is budget was positive, but that doesn't matter. Market doesn't care, right? So even could be one trigger where we can expect such kind of a high probability. And I went into a positional shorts. I mean, of course, my validation is 11,000 plus levels. Something if that's going to change, value area is still going to build higher. I'm going to change my opinion. So far, value area is so far building higher. And if it's still going to maintain higher, then I have to change my opinion, or something different is going to happen. Still, I have to take my time to change my opinion. Monday is going to be balancing. Again, I have to change my opinion. Right? If at all from Monday onwards, we are starting a crash, that could be the start of the crash here. And we already onboarded it. We are not waiting for the confirmation, right? So we have all sort of confirmation. Initial pre-confirmations are already there. But if something is going to go wrong, I have a very tight risk to get out of the game before something happens, right? So
Rajan,
yes.
Yeah, one question on market profile. I mean, if we have we seen any pattern like continuous PPOC, like V pattern, V or even PPOC? If we you said that.
Yeah, I've seen that. I've seen that. In Grasim, I've seen once. There are 3 continuous days. We've seen P-shaped profile, 3 continuous days. Markets are so bullish. It's a great bull market in 2017. So every other day it was a P-shaped profile. In Grasim, I've seen once.
Okay, that means coming new money. It's not.
Yeah, it's a new money. It's a new business.
Okay, I mean that's like how do we expect that it's a, I mean, it is
It's a strong auction. It's a strong auction. It is a strong auction. Possibly it's still a positional long. You should not fight against them.
Okay, yeah.
You should continue in the direction of the long side, or better, you don't trade against shorts. Maybe if you want to short, still you have to keep it intraday. You should not take a positional shots there.
Okay. And one more thing.
Yeah.
Any PPOC for continuously for 3-4 days? PPOC, I'm saying.
PPOC.
Yeah, prominent point of control.
Yeah.
Any.
No, I showed you the examples. I showed you
or we.
In December, we got almost 4 prominent point of control in a row.
Yeah.
So that's already there. That's already possible.
So that also we're going for shots there. If that is the case, like it went up and came back down.
Yes, then in that case also we'll short if markets are going up with 4 prominent point of control in a row, then it is a positional short.
Sure. Yes. I mean, my question is like, I got 4 prominent point of controls continuously.
Okay.
For the upside. Okay. And from the 5th day, I'm getting another prominent point of controls continuously for the next 4 days for the downside. Any pattern like that?
No, not such kind of patterns.
Okay. If it comes like that,
it's come like that, you know what to do. You know what kind of players you're dealing with. Again, you have to reverse your position.
Okay.
Right. So there are many times you're gonna see that there are many times you're gonna see combinations of information mostly. So that is why you're gonna record those information and you're gonna use those information repeatedly. Like I'll tell you one of the information which I learned this time, where we can spot a potential inventory getting short to 2 short. Okay, let me complete this first. Just open to change the color from violet to slate gray. So there is an AB poor low here. See that this is September month contract. Maybe current month contract you may not be able to see that. If you look into the connections, I connect to e-signal. Okay, so you can see this even days crazy activity. It's the same thing we talked in the session. There'll be a lot of betting here. Some people, most of the people will having a stops at the day high, and some people will have the stops at day low. So what happens is that stops, wherever they would have been kept their stops, it would have been hunted. So it is a shakeout movement. First of all, they are shaking out all the weaker hands. They don't want players to be on the long also, on the short side also. So they remove the speculators. This action will remove the speculators, so that speculators will be always late to any kind of trend. Okay, and in fact the late rally also, it would have been that rally was almost how many points? Almost 60-75 points, right? So 75 points rally, anybody who shorted late also, they would have been went for a cover. It's the same pattern which happened on long-term capital gain. The last budget, last 2017 budget, if I remember correctly, budget was happening, nothing was happening, everything was running casually, and all of a sudden market crashes because of there was a long-term capital gain announcement came. Market crash 150 points. Anyone able to understand what happened next? They done this. They done complete recovery. In fact, they went almost 50 point positive, and finally they closed down, and they done something like this. That day ended positive marginally or something, and the next day onwards the correction started. Next day price, we opened 180 points gap down, and we started the correction started from the 1000 points correction started in a matter of 4 days. In a matter of 4 days there was 1000 points correction, right? So that is the reason I said, like, budget day, it's difficult to trade, but yes, if you know what you are doing, you can always initiate a positions over here, or at the end of the day you'll be more or less you're going to get at the same price. That's what happened. Price opens here, there was a drive, and First half an hour we are here, closing also somewhere over here. So not much of a difference from the first half an hour low. So that is the expected one. Very rarely if there are any sharp surprises coming there, unless which is anticipated. Other than which is anticipated, which is coming there, then the market does some directional movement. Whereas the LTCG is in 2017, when long-term capital gain came, already people started speculating before, even before the event comes. There are a lot of media channels talked about possible long-term capital gains. Right? That has been there for almost 6 months. And finally LTCG came, and it's not a surprising moment. But if it is a surprising, all of a sudden if there's a surprising moment, market would have been taken in a directional way, like something like an RBI. All of a sudden people are anticipating 25 basis rate cut or no rate cut, and all of a sudden RBI itself cuts 50 basis point. In that case, there'll be a surprise directional auction, right? So otherwise you're going to see this kind of auction most of the time. It's difficult to trade, right? So it's really difficult to trade this kind of price actions. And yeah, with order flow we can have a tighter risk, but not every time there is a possibility that order flow will always give you momentum auction kind of patterns every time. If that patterns are not there, you should stay away from trading those setups. Only if there are sharp setups coming in from the order flow, one can trade it on. And moreover, those kinds of days, at least this game was really slow and steady. They slowly went up and they slowly crashed, right? Whereas when there's an RBI event, it will be there will be a fast spike up, and when the price is crashing, it crashes fast and recovers fast. That the tempo will be really high. At least on 4th of February, if you observe the tempo was really slow. Price was slowly going up. The entire move was slowly, steadily going up. It was not a fast jump, both on the upside also, both on the downside also. Right. So market always, as I said, they don't give any clues immediately. Maybe from Monday onwards, we'll be getting a very solid clue from Monday onwards. Monday onwards, whichever the direction is there. Monday, if market is showing high confidence selling, that's where the confidence comes into the picture. How do I know whether the markets are moving in my favor? If at all, if you are seeing high confidence selling from Monday onwards, right, that could be the starting point of the. I mean, we are already having enough clues, but to get the continuation, the high confidence sell-off and price staying, the high confidence sell-off sentiment will be staying throughout the day. That sentiment has to hold. That is where you can expect a solid correction. I'm expecting somewhere around 10,200. What I don't want to see on Monday is a low confidence activity or price trading here and doing a lot of activity. That means something different is going to happen. Maybe this could not be a serious correction at all. It's maybe the market want to do some more balancing here or more irritation here. Maybe the budget is not the budget event is not a trigger point at all. And this excess is something, it's getting revisited again. That is an invalidation. Price opens here and does some activity. A lot of consolidation happens here. That is an invalidation. Or price breaks out and then come back in. It started doing a lot of activity here. Again, that is an invalidation. So there are a lot of ways we can invalidate our positional view. But one place where we are looking for a potential top, all we need is just a continuation with a high confidence breakout from Monday onwards. Right. So that's the timing we are talking about, and that could lead to 10,200 or even lower. Now I'm talking about 10,200, right? So previously we haven't talked about even not beyond 10,700, not above 11,000. Now this time I'm talking about 10,200, maybe the takedown of this swing low, and possibly worst case much lower, but this could happen in a span of 2 weeks time or a 3 weeks time. So it could happen really fast this time. And every time the price is going to go down, you'll be seeing you're going to see a lot of positive news. It'll be like price goes down, there'll be a late recovery, and then next day price try to shoot up, and then there'll be a rejection, and again it goes down. Again next day price opens gap up, and then it slides down. So it'll be very confusing if you are going to look from the price perspective, because people will be trying to figure out where the bottom is. every time the price used to rally, there'll be a steep sell-off, but despite price recovered from the lower corrections, that's the news you'll be getting of price recovered from the intraday lows. Price opens gap up very next day. That kind of things will motivate the people to find bottoms. People will be yelling up, this is the bottom, that is the bottom. That's the same thing people said here. People are every other day they're calling for a bottom here, right? But then it took almost 2 months for the markets to find its bottom. So market is some other way it will find a bottom, right? So if this correction is going to be serious, 10,200 is a fair place to look out for, and moreover, we need this 10,700 has to break. We have all the odds of breaking because 11,000 players taken a control here. So that means this put writing can be smashed out. All these put players can be smashed out, and Nifty weekly again it's going to bring volatility. So all these subtle confirmations are showing that there is a volatile, there is likely to be a volatility, there is likely to be a market top, and profile is confirming, option clues are confirming. All we need is just a follow through from Monday onwards, right? So if that is missing, we have to think about changing the game, right? So yeah, that's what my thoughts so far. Any questions?
Sir, in NT8 quarterly 4 hours chart, how can we view, sir, for
yeah, that's a nice question.
for top down analysis?
Yeah, understand. So it's pretty simple. I haven't tried it out, but I think we can make it. Let's see. Because I'm an Ami Broker user more than a Ninja Trader user. I'm using Ninja Trader only for 2 reasons. One is market profile, and another one is order flow. Right. So let's say I take some time frame. First of all I'll try to get a chart. So maybe monthly is what the maximum you're getting here. If I want to get, at the same time I'll also go to data series and say apply. Oh, my data feed is not connected. Okay, anyways, then in that case I'll say like 3M, maybe 3M. 3M, I think it will try to open minute charts. So maybe Q. What if I type Q here? Symbols are getting changed. Or maybe I should type 1Q. Let me try with 1Q. Say like 1Q. Maybe this could bring in quarterly time frame charts. Okay. Okay, yearly is there.
360 hours, sir. 360 hours.
No, let me check. Month. I think we can add a month here. Okay, maybe 3 months could do. 3. Okay. So there is a configure button there, and you can go and configure your favorite time frames. So now I have 3 months. So maybe this could bring a quarter. Right. So I don't have enough candlesticks to charts to show, but this will get you the quarter charts. So all you have to do is that click on this selection, go and configure.
Okay.
Add your go to months and click on add. Let's say you want a 2-month time frame, you put 2, or you want a quarterly chart, you put 3. So you will be getting a quarterly time frame there.
Okay, sir.
So something like, let's say I want to plot and
for 4 hours also same configuration. You have to go to configuration and
yes, any time frame, all these are favorite time frames. So all these are customizable. You can edit those time frame. All these are not standard settings. You can still go to configure and you can change those setups from here.
Okay.
You can remove, add, delete, anything you can. If you want to do, you can do it. By that way, you can do a quarterly time frame kind of analysis.
Sir, there is something case studies, sir. What is that, sir?
So
what you have given.
The case studies are nothing but we are talking about the scenarios, right? So how the ICC bank topped out, or how the S bank got topped out. So one of the cases where the S bank topped out, we talked about the S bank top, right? How many of you remembered? I'm not very sure. Today morning I written an article. Like whatever we already talked about this in the session, and the same thing I just explained in the article format under the name double momentum auction reversal. So it's dual momentum auction reversal. It's a market trade setups, right, which we recently looked into very recently in Yes Bank. We spotted this top setup. So this is where we identified the top, and that particular day my comment in Slack was dual momentum top. And when that momentum happened, the very next day market opened. In our live market commentary, we discussed about this dual momentum top here, where this is where the earning season was. Right? Earning season was here, and lately price was shooting up. Point of control not migrating. Price is migrating higher, and we are getting a balanced day. That balanced day is coming at letter A period. So it's coming at the day's high is coming at A period, and then price used to drop down. And second day also price used to top at letter A period, and price used to drop down. That's what we call as a dual momentum top. So the two swing, the letter A is coming at a major swing high. Second day is also letter A, one of the potential market top setup. This is what we talked about it. And now you know where the S Bank is. S Bank is at 186 levels. 186 is what the last traded price. And this is also a kind of a scene of crime, right? So it's a news-based impulsive movement. You take a news-based impulsive movement, let it be Maruti or S Bank. Let's take S Bank first of all. So let's take S Bank. Maybe somewhere here. S Bank. Yeah. No. I think I missed that information. Okay, it's fine. See, so far what S Bank had done is that, maybe I'll repeat it again here. This is the earning, this is the earning result day. Earnings are bad, of course, but then it's not as bad as what the crowd anticipated. So there was a spike up. Lately, there was a one-sided movement. Before that, it took the day low also. It took the day high also. Right? So means it would have killed someone's stop before going up. That's what most of the earning season does. And it was an 15% spike in last 30 minutes. It's an impulsive movement. That's why we call it as a scene of crime. Scene of crime. And that scene of crime, we already talked about it. This is a scene of crime. Point of control not migrated. Only price was migrating. Right? So price always returns back to the fair price zone. The fair price zone is towards the point of control. Price mean reverted back. But when it is coming back, it also created a double top. So double momentum top. This is also one top at letter A. Again, letter A period top. So in that case, that letter A, the second letter A, acts like a strong positional resistance, which is the invalidation zone. Unless that zone is not hit, one can go and take a positional longs, positional shorts there. So we already talked about, if you missed the daily market commentary, just go back and see how we seen January 25th, how we seen 24th, how we seen 28th. Every other day we discussed S Bank. Probably during middle of the session we would have been discussed if it is S Bank. Right. So how we anticipated a top here and how it came up, and this particular day how we seen we seen a potential upside there because there was an AB poor high, and it's a prominent point of control. Price was touching one of the day exactly at the prominent point of control, so we expected price to revisit back towards 206 levels. In fact, it does even more higher. But when it is coming up, we also identified a shorting opportunity also, because the inventory went short to too short. So next day open, you can observe there was a balancing, then you can think about shorting. Again, that balancing day, we got the very next day, it forms an open drive down. That becomes an dual momentum auction reversal. So that becomes an dual momentum. It's called dual momentum because back to back 2 continuous days we are seeing an momentum reversal top. So that's the pattern we can call it. That's one of the live case study. So that's the case study here. And so far what S-Bank had done is this. This is still last 31st of December. But now again, one more open drive. If you see this recent information, every other day it's an open drive. Like, so price started and then it was going down. Every day you can see letter A is a top here. Letter A is a top here. Again, if you see that the top is at letter A. Top is coming at letter A. Again, if you look in this particular day also, letter A is a top. And this is also letter A is a top. And even last 1st of February also, price topped out and then it started sliding down. Again, 1st of February also, letter A is the top. All these are momentum sellers. When these momentum sellers are there, try to stay away from them as much as possible. Trading against them is not a good business. Don't try to take longs here because they are really strong sellers. Every other day, price is topping out in the first half an hour and they are pushing the price down. They're pushing the price down. They're pushing the price down. They're pushing the price down every other day, right? So it is a strong auction. Stay away from them. Or better, don't trade against them when you're seeing these kinds of patterns. Somewhere in the market has to show the weakness. As of now, there is no weakness. What we are seeing is the strong sellers are there in the markets. So don't try to fade them. That's the information you can get from either. Now is there is an opportunity. It is, but it is we are very late to the party here, right? So still we are at the 186 level. Maybe your entry point at these locations should be good. One of the good trade locations there. Even one of the place where you get a positionally a tight stop loss here at 225 levels. Now, if you want to go and play the breakout game, you have to be really lucky. But what happens is that there'll be a breakout, but all of a sudden there'll be a reversal, and then again they try to bring it down. Now the game will be not easy. It will be very challenging to play the game. Something like the Zeal they brought down 37% down, and then they went up again closely some 30% or 28% or 20 plus percentage they went up. And now they started again sliding down. That's the kind of complications you will try to face. So if you look into the Zeal charts, you come to know if you're late to the party, you know what kind of damage one could have done to the portfolio. That is why I said, like, Zeal, when you're playing Zeal, it's not going to be an easy game. That's what. So think about the time, or maybe a daily chart could do. So on the daily time frame, you see that there was a steep crash coming on. Steep crash came on where? On 25th, and then promoters the very next day they cannot keep simple, right? So because media will be calling them, what you're doing, boss, or tell me why your stock crashed, right? So they have to do something else. What Zeal had done is that they took the board meeting and they brought all the lenders, mutual funds. They asked them to not to do a fire sale, because when the promoter shares are pledged, right? So when the promoter shares are pledged, the lenders will freak out and they have to liquidate their portfolio. That will create even more panic trigger, right? So maybe something has been happened there and they jacked up the price. But now what you're seeing is, and now the Friday sell-off is not good. So that could be a sign of a continuation from there on, right? So which is not a good setup on Friday. So Friday, if at all any follow through, we will again go and break 291 levels. That may not happen immediately. What generally happens is whenever that this kind of bigger breakout happens, usually you'll be finding that the market gets into a balancing mode, and one fine day you'll be seeing another crash like this, and again it keeps going down. So if you want to play this kind of game, you need to have a strong stomach, or you should be willing to wait patiently for these kinds of stocks to go down. You cannot play an intraday game there, because trading such kind of games will freak out. We are not trained to our humans, we are not trained to handle this kind of volatility. Something like PC Jewelers was doing like this. One shot it was down by, on DHFL. In fact, DHFL also done the same thing here. Once DHFL crashed 60%, next day it was up by 20%, and again another day it was down by 15%. Again it was up by 10%. So there was a crazy volatility. And when PC Jewelers crashed, I'm not sure whether PC Jewelers is still there in the FNO segment or not, but when it crashed, we are in the session. People literally ask me, "Can I go short?" Say like, "Boss, no, don't do that. Don't do investing also. Don't do trading also in the segment, because trading will be very dangerous here." It came up. It was in a sideways for almost some 3 months, and then it started its crash slowly. Right? So we're not sure about the time frames. Maybe if you want to play this kind of game, you need a lot of screen time observation here, which I don't have currently. All I know is trading these kind of setups are very complex. You'll be usually liquidated from your positions, no matter what, whichever the direction you are trading, whether you are trading longs or trading short, you'll be easily moved out of your positions faster because of the volatility. Right? So you cannot stick to your rule book, even if you think like zila is going to crash, unless you know you have a strong stomach. You can afford a bigger M2M, and still you can play this kind of game. Or you have to be really lucky. On Monday, Zeal again crashes, or again another crashes. You initiated a trade and again it crashes 30%. That kind of things, you need to be really, really lucky, right? So that kind of things, they happen very rarely. Like now the DHFL was crashing, right? So maybe I'll pull up the DHFL charts. Come to know what I'm talking here.
Yeah, is S-Bank is still a long-term investment stock, or it's like a?
I don't know, but still right now it is in a sell mode.
Okay.
So these kinds of things. The question here is that, let me pull up. Right, so these kinds of sideways market will make you to frustrate you. It will make you to liquidate from your positions. Right, so one need to have a strong more view here. And the place like this day it was a 60% down day, and the price closed 10% higher from that. Think about the people who entered here, right? So that's not a right trade location. From them, market went against 30%. 30% nobody can survive, right? 30% nobody can survive. Someone is thinking that this DHFL will further crash, you go bankrupt. It will go bankrupt, but you might be right in your opinion. But from the execution perspective, think about what price level you are trying to catch. Is it a fair price or not? Is it a good trading location or not? Without thinking that, if you want to initiate a trade, even if you're good in your view is right. From 300 it went to 100, right? Fantastic. Your view is right. Salute to you. But from the execution perspective, you may still go wrong, and you will be still liquidated despite you are good in your view, right? So it came slowly, steadily down. And again, think about people who started over here. Think about the amount of frustration. It's almost 4 months, and then it's crashing down. Who can hold an 4 months of future contract and still believing in that? Only people who have strong stomach, who have a strong belief, only they can hold it. A short-term trader cannot hold it. So as a short-term trader, you need to know whenever you are initiating a location, is it a right location or not, or is it a risky location? Where when such kind of news announcements are going to come, always there will be counterattacks from the promoters, always there will be a counterattack from the media channels, because lot many people are holding their asset classes, so they want to have an exit. Something like Zeal, what is the market cap of Zeal? And you know, okay, maybe we can take screener.com to check what is the, let's say Zeal. the current market cap was 34,000 crores. Sometime back it was around 70 crores, right? So 70,000 crores. If 70,000 market cap is there, at least 5% will be owned by mutual funds. That is out of 70,000. Out of 70,000 crore, how much will be owned by the? Assume that 70,000 is the market cap.
3,500.
So out of that, it's a 0.05%. That's 5%. 3,500 crores of asset somebody is managing only on zeal. If that is a bad news, right? Definitely they are the first guy to freak out. Right? They are the first guy to freak out, and they are the one who does the fire sale, right? So and moreover, promoter shares has been pledged. That could be another some couple of thousand plus crores. And they are the first lenders are about to freak out. That is why every long-term players will come for a sell when there is such kind of an margin trigger is going to happen, right? When a margin trigger happens. So now what these guys will do that they may not exit immediately. They'll be slowly liquidating without doing a fire sale. Probably the promoters would convince them. I mean, I don't want to speculate any of this, but I am saying that overall game, this will attract these kinds of bigger liquidation. Will make the asset class unattractive for the long-term players. They might thinking of shifting to the low-risk asset classes. So they might try to pull over slowly, steadily. They might pull over from the zeal, and they will slowly transforming it to the some other asset classes. Because end of the day, they are answerable to their investors, right? So all of a sudden, their NAV goes bad. It's not something good. So maybe they might come to immediately buy those kind of asset classes to stop those liquidation happening, those freaky panic to happen. There'll be once they pumped up to a certain level, then they slowly distribute to the they slowly distribute it to the people, right? So when in the due course, you'll be finding it attractive. I know many people who bought DHFL and still holding it, hoping that it's one of the finest investment in the world. When there is a 60-point crash when it is coming, right? So whenever you note only one thing down, when there is a steep crash, if at all there is a recovery, it's going to take a long time to recover. There is one concept called knock navis. Anyone heard about a ship called knock navis? There's a ship called knock navis. Knock navis. Okay, the knock navis is one of the finest ship in the world. So the ship, if you want to take a 360-degree turn, like it takes more than 15 minutes to take a turn. Because it's such a long ship, it's one of the lengthiest ship in the world, and you can go and watch those videos. You'll know it's the longest ship ever built, right? So that's the knock navis. It's taking a long time to reverse itself. It's to take a 180-degree turn. To take a 180-degree turn, it takes 15 minutes, and something like that. When there is a serious crash in the markets, even if there should be a recovery, it cannot be a V-shaped recovery. This people expect there is a faster crash, and then they will expect a V-shaped recovery. That doesn't happen in the markets, at least. So even if there is a sharp crash in the markets, they have to do a lot of consolidation, and fundamentally things has to change, and then you can expect this to happen. But this scenario is very rare. In the meantime, long-term players will lose interest. Even if the companies are doing good, long-term players will lose interest. Market will go sideways, and they will slowly, steadily start exiting from the market. So only the first thing to do is that there'll be some jackup, and that people will use as an opportunity to exit. And again, every single rallies will be get sold off. Every single opportunity will be used as a opportunity by the long-term investors, especially the institutional investors, or the FIIs or the DIs. They are the first one to freak out, and they are the first one to use those rallies to dump it to the retail community. That's the thing. So when such kind of margin trigger is happening, stay away from such kind of stocks while investing. It's mostly a bad decision. Very rarely those kind of stocks get recovered back. Most of the time it goes to trashes. Most likely it will be a trading instrument. It will be mostly used like a speculative instrument. Because just like that, the long-term players, once they lose the interest, they don't shift their focus back again unless there is a radical shift inside the company is coming in, right? So if they sense something bad, it's bad. So they are, end of the day, they are answerable to their higher authorities and investors. So institutions definitely flock away from those kinds of segments. So they use every rally to sell it. But trading is relatively tough here. Stay away from trading. Maybe if you know that you have a strong stomach to digest these kinds of setups, all in a sudden you are ready to take an 20% upside, all in a sudden 20% downside, that kind of crazy movements, right? So which is very, very difficult to manage even with mathematical models. Yeah, from an intraday perspective it's fine, but from an positional perspective, you never know. Tomorrow there could be one bad result, the stock will be again going down another 60%. Right? So which is quite scary, but I would say that it's better to avoid. So, or if you're an investor, get out of such kind of game. Or if you're thinking about investing, don't think that. That's the only thing. But if you're thinking about trading, better mostly avoid unless you have the strong stomach to digest those kind of information. I don't do that.
So could this be good for intraday?
Yeah, definitely for intraday players, it will be a good speculative stock to play up and down. We can use some strategies, simple strategies to take but definitely not market profile. Maybe some simple indicator based rules. It just usually works. So from an intraday perspective or a very short term perspective, it's good, but carry forward, it's very dangerous to any side, whichever the side. At least you would have seen in the TV channels, Z was a continuous stock for the entire last 1 week. Right? So we don't know who is lying, whether promoters are lying or media channels are lying. What is the reality? All of a sudden, the institutions are coming and saying like we are finding values or something. That they use some weird terminologies there. I don't know what the lenders said. They use some weird terms on those days. Let me check. They say like we are finding value in Z's stock. That's mostly, we don't know whether it is a true or not. Right? So Z lenders. So that's 13,000 crore. Because of that, it's what making the lenders to panic. Because already it would have triggered a massive margin call. They would have been, means that they will be dumping that much worth of asset classes. When asset class price is going down, they are the first one to panic. So they will try to do a fire sale, right? So what happens here is till April. So in the meantime, they will slowly and steadily exit. They maybe come to an agreement that don't try to do a fire sale. So they might be slowly selling on every rallies. So we don't know who is creating the rallies, but every rallies will be used as an opportunity to sell. In the meantime, we'll be getting a lot of positive news about the Zeal. Company might try to protect floating of negative news. So as much as possible, media channels will try to talk the entire exactly the reverse way, and finally it will be dumped to the people. Maybe a lot of calls will be generated on the bullish side. More people find as an opportunity to buy. More investors see as an opportunity to buy. End of the day, it will be dumped to the retail hands or the small investors. Okay, fine. So these are the case studies. The Zeal will be definitely one day it will be at another DHFL. That's for pretty sure. No doubt in that. If at all something has to change, something is really wrong, and I don't know what is wrong with that. But when this kind of crashes happens, usually it doesn't end well. Even if it has to end well, it has to do a lot of consolidation, and then price has to came back above 440 level, sustaining. Then yes, you can take about risking your fair money there. But putting your money right now for investment, company may be good in the past, but we don't know what. There may be a lot of uncertainty is there, and people will say always go and buy when there is a blood is on the street. I would say that when the blood is on the street, that is fine, you go and buy it. But when there is a margin call blood is there, try to stay away from that stock as much as possible. Right? So definitely blood is on there, but all are margin call triggered. Long-term players are desperate to exit in this counter. I'm talking about institutions. I'm not talking about retails. Institutions are desperate to exit. Lenders are again one form of institution. They are from banking guys. who are giving a commitment. They are trying to liquidate the portfolio to get out of their positions there. So overall, not an investment tool, not a right investment tool here. I mean, at least the odds are not supporting.
A similar thing happened to Vedanta. So whom to trust? It's happening almost daily.
Vedanta is it's something different. It's just 10% correction. It's not a margin call, right? So maybe that could be something fundamentally wrong, and temporarily there might be, and people might get out. Is it a major thing? Is it a bad thing which is happening in the company? That's what I mean. See, I'm not an investor, so I'm not the right guy to comment. What I can do is that all I can tell you is this crash is not going to end the code. That I can comment on that. VDL, I don't know. I don't want to comment on anything. I don't have any views on VDL, in fact, as of now. How much was the correction? 17.7% correction. Okay. No, it's just serious, but it is not that serious like Zeal. But again, one more 30% kind of correction, something is really long. But I don't know. This is kind of serious only. This is kind of serious, but if it's going to trigger more margin calls, definitely this is going to end up well. Yeah, any other questions?
If you think it's appropriate to talk about the different what is that? Ultima Pro, the different ones,
You're asking a difference between Ultimate and Pro.
Yeah.
Okay, the basic version of Market Profile is called Bell Market Profile Pro, right? That's the basic version. That's the basic version. And here you'll be getting mostly the market profile, the basics of market profile you will get, and volume profile, and composite profile, composite volume profile. I mean the absolute volume for the day that you will get. And you'll also get a market profile, both a split version and a regular version, normal profile and a split profile for current day. Split profile. It doesn't has any automated reference level. And the Bell Ultimate is all about basic version plus automated reference lines, plus I think some alerts has been added. You need to check with them, some alerts, some volume alerts or something, and plus some email alerts, and plus scanners. So all those automated reference line, those scanners will be available. You'll be getting scanners across different symbols. So those are the major advantage. You can manage basic version if you know, like if you don't want to focus on back-to-back prominent point of control, back-to-back secure high, 3 prominent point of control in a row, 4 prominent point of control in a row, 4 poor high in a low, or multiple structures, multiple weaker structures are getting happening over there, or a weaker ORR, right? So those kinds of reference level, if you can manage manually, initially it is motivating, but over a period of time, if you have to do it on a day-to-day basis, if you are a trader, so in such a case, if you don't want to focus on those reference level, you want to focus on your trades and focus on your views, then Bell Ultimate is one of the finest tool. Otherwise, it's always good to start with Bell Market Profile Pro, and anytime you can upgrade to Ultimate.
How much is the price difference for Ultimate?
No, I don't talk the price. You just check with Vinod. You can check with Vinod. He's the one who handles market profile. Who handles the entire Bell TPO products.
All right. Thank you. Yeah.
Rajendra, different question.
Yeah.
So curious, like, did you start a career in trading, or you were into some job or something and then you switched to trading? Basically, why I'm asking this is what it takes, what transformation it takes for a part-time trader to get into a full-time trader kind of stuff.
See, I had an 10 years of experience in telecom field. I started my telecom career in 2005. So I studied during my college studies. I'm an electronics and communication engineer by profession. I mean, my EC degree holder. But I'm from the middle class family. I mean, it's kind of an my dad owns a business. My grandfather also owns a business. They was running a matchbox industry in my place is from Sivakasi. So kind of an rich guy, but all of a sudden there's a lot of litigation issues, and then we have to live like a middle class family. And so I got into engineering, and then I somehow I am very desperate to get a job there. So somehow I thought like by that's the time IT industry is booming. So most of my time I spent only in coding C++ just to get into some IT job. Unfortunately, I got into my core job. I got into Aircel as a switching engineer. I was controlling the south of. I was configuring the telecom networks, the 2G, 3G networks by that time in south of Aircel, and then I have to live along with my friends. So I'm out of my family to work in south of Tamil Nadu. I used to work in Trichy, so not Trichy, Tirunelveli and Madurai. And though I was most of my studies I done in Chennai, I went to Madurai and Trichy. I worked there. One of nice environment there. And evening hours, I don't know what to do. I don't know. I don't have a girlfriend, of course, by that time. And
okay.
So I'm mostly I want to do something else. I want to make money either way. So initially I tried hacking, cracking, right? So I learned all those. I learned the hard way that that's not going to work. Those are old technologies. Now whatever the people who are handling is sophisticated way of thinking. So either you need to be a hardcore programmer. I'm not a hardcore programmer. I know programming, but I'm not a hardcore programmer. I'm not mad about programming. So I thought like it's not going to work out. So I thought like we'll start with something like writing a blog. So maybe we start writing a blog so that we can make money from Google AdSense. So maybe if you start writing something interesting, I was little bad at grammar. So even now I'm not much. You can find a lot of grammar mistakes the way I'm speaking. But still, I started my blog. Initially I started my first blog was jobtree.blogspot.com, and then I closely got some 10 blogs ready. One is in tamiltrailers.com, jobtree.com. I started launching websites and then started posting some contents, cut, copy, paste. It just started like that, cut, copy, paste. You write a blog, and then I thought of making money. It's a very frustrated business. It's a long journey. So it is difficult to crack those places. It's tough to make money from Google AdSense. It's a very slow and steady business of making money from the advertisements, but you have to generate a lot of contents. And I learned that this is not going to work. So, but I'm still, I thought like I should write something which makes me more curious. That's the same time one of my chacha, my Chittapa, we call him Tamil Chittapa, right? So he is an investor. He's also a short-term investor. He don't use any tools. We used to talk. Those initial days, I used to get some initial knowledge about markets. So he's trading right from 1985 onwards. So he made his fortune from Infosys futures, but later on he came out of the 2000 crash. He came out of stop trading futures. Now he trades only cash markets. He invests only in cash markets. mostly in small cap segments, not small cap, but mostly in mid cap segments, or mostly in large cap segments. And he's more of an investor now. He's almost 50 plus years old now. And but he in those initial days, he made most of his fortune, and most of the pledged my grandfather's assets he brought back into real life. So he transformed, got back into the old status, right? So he retains his family status to the normal. So I was a little curious to know about stock markets. So he haven't taught me much, but we share a lot of experiences among us. Like, but those days we learned. So I went on into the websites. I used to hang around after my my lunch break. When my lunch break, when I was working in Aircel, during my lunch break, I used to go to the internet cafe. Those days we don't have much of internet cafe centers. There is a Reliance cafe nearby, so I go there and then browse for half an hour, and then I'll take a quick lunch, and then again come back to my office. And when the office ends, and again go back to the Reliance Center, I'll be studying about stock markets. And by that time, I was holding some 10 blogs. Some decent revenue started coming in from Google AdSense. Day, night, the only thing is to study markets. So I learned all the classical technical indicators, Fibonacci, Ichimoku, you name anything, I was doing that. By that time, there are no I'm not got introduced to softwares like AMI Broker, or I don't know even their names. This is during 2006. Okay, I learned some simple ways of moving average, convergence, the divergence, MACD, stochastics, and trying to predict the markets. By that time, there is no market calls, right? And when I was when I 2.5 years in Aircel has been passed by. This is during 2007. Markets are booming everywhere, and I got my first loyalty bonus in Aircel. So they give almost 2 lakhs of loyalty bonus. That's agreement they given to the joining. When I joining, that's agreement. They said 2 lakhs you complete 2 years you complete in Aircel, you will be getting a 2 lakh as a loyalty bonus. That 2 lakhs I again pushed everything into the markets. that's very close to 2008, and nothing works well for me there. And my sister's marriage was supposed to be there, so I took all the money and give it to my parents. And closely, I lost 3 months of my salary. By initially, I learned options. My first option trade was a double, so I was very much excited. I'm not sure what is delta, what is gamma. I don't know everything. So I was a plain speculator there. Almost closely burned 3 months of my salary. By that time, my salary was 12,000 rupees. I closely burnt all my 3 days of my salary. The salary comes, all my money goes to the betting. Like that kind of speculator I am, right? All the entire money goes for the speculation. No risk management, no stop loss, nothing, no bullshit there. So just go and bet call option or put option. You make money.
You should have been a daredevil by then.
And you name anything, I would have been tried that. Okay. So then I thought like this is not going to work out. I need to take some serious understanding about the market. So let's go back to the basics. Let's try to understand where you're making mistakes, what the problem with the RSI, what the problem with the MACD, why it is not working, why there is an execution issue, right? So go back to the basics again, which I had done many times in my life. Even when I started with market profile also, I burned a couple of times. Next time it started with, so I stopped trading for quite some time. So I deeply involved into only learning. Once the office job is over, go back and study charts, nothing else. Learn new strategies, try to switch indicators, try to change indicator, try the combinations of indicators, right? So try to check Fibonacci levels. You can see my blog during those 2007. By the time 2007 was there, right? So then the idea comes, why not to try some softwares? It's a typical journey of a trader. Probably many would have been crossed the same stages, or they might be trying to cross the stage right now. That's where we got introduced to Spider. So that's where we got to know about Spider. I took a Spider, and they have a real-time trading software. They are one who provides real-time trading software. Otherwise, the broker doesn't provide real-time trading software. Yes, Sharekhan does. So I opened an account with Sharekhan. Initially, I used to have with ICC Direct, and then moved to Sharekhan. And so there, not a frequent trader, but every time I used to prefer going in afternoon shift. I just came to Chennai. I quit Aircel, and then I came to Chennai. I was working in Nokia Siemens Networks. So I was handling Vodafone India operations. Throughout India operations, we are configuring those Vodafone networks there. So once the market is, I used to prefer mostly night shifts and evening shifts. So mostly in a day, I'm a kind of an intraday trader. Day in, day out, I'll be in the markets throughout the day. And 3 o'clock, my office starts. I go 2:30 or 3 o'clock, I'll be in the office. So in the meantime, I'll try to do all my intraday studies. Or at times, mostly I prefer night shifts because night shifts end by 6 o'clock. I have an 6 to 10 I can sleep. That's 4 hours window. By the time market opens by 10 o'clock. So 10 o'clock to again 3 o'clock, I'll be in the trading. Again, I can go back to night shifts most of the time. So that is where even though I'm working, most of the time I used to trade day in, day out. We are testing the software scanners now. It's like feeling like a machine gun in hand. But somewhere we are making money and losing money. We are following some strategies, some swing strategies, swing breakout strategy. That's what they thought, right? So it's easy to teach a swing breakout strategy to anyone. So you monitor the swings. If that swing is going to break out, you take the previous swing low as a low, and then when the market breaks out, you go and trade the breakout. It was a successful strategy because by the time whatever you buy, it just keeps going up. And at times it will be you will assume that whatever the luck you are getting is mostly your skill. You mistakenly assume that okay, everything is happening because you learn something and there is a skill is involved over there. Right? It takes a long time to understand that we are in the phase of luck. Once the luck phase gets over, then you see the reality. The reality of the market is completely different. You will get into sideways market. You will exit at losses, but still you will be right. And you'll be trying to figure out where I am exactly going wrong. The zone where we went wrong is most likely, again and again, we got into that price-based emotions. All of a sudden, price used to crash and you exit out of your futures, and then the market moves happens. So we touched all those tools without any proper understanding there. That is one reason there. And second thing, exactly at the 2008 peak, right? So I thought like this time, let's continue with our day trading also. Because it's not really going bad. It was a mix of profit and loss this time, at least not putting all my money into options, naked options buying or naked options selling. So this time, 2008, January 2008, I have another 2 lakhs in my hand. And I thought like, okay, this is markets are booming. Anyways, all the stocks are doubling, tripling. Penny stocks, I also tried penny stocks, some stock like Sabero. It went from 2 times, 3 times. So I made some money. There, 2 lakhs of money I'm holding in my hand. So I thought like, okay, January 2008, let's investing. Why to take care? Let somebody work for us. So go to Money Control, subscribe to Power Your Trade, get some multi-bagger tips, and invest in one of the stocks. Study the fundamental and invest in one of the stocks. I'm zero at fundamentals. Okay, I'm really zero at fundamentals till to date. So there is a recommendation came from some analyst. I know what is analyst. I don't want to name right now. He recommended Alps Industries. This is during 2008. By that time, it was at 72. So I placed all my 2 lakhs into that Alps Industries. So next 1 year, it will double. So easily take your money out, and it's easy money. Get into 4 lakhs and use it again for trading. Right. So always my curiosity is not into investing, so mostly into trading. At the same time, I also started the blog. Market Calls started during September 2007 to record all my trading activities, my learnings. So initially, all the initial days, if you go through 2007, you'll be seeing all the EMA crossovers, Fibonacci, Ichimoku, Iliad waves, all those things you'll be able to find in my blogs, right? And then the day I invested, the next day is where the crash happened. So I haven't got into major losses. In fact, 72 becomes 86 or something. I closed at some 20%. It was 20% higher. I closed it, and again I re-entered back. That is where it started sliding down to 56. So by that time my sister's marriage came. My mom asked me to I'll take all your money out. I was down by 50,000. So 1.5 lakhs. They asked, whatever the money you give me, boss. That's what they asked me. So I took all the money from the markets, from investing, and then I given to my sister's marriage. And then still we got something called in our company they used to give something called Amex cards, right? So by that time I was around 30,000 rupees salary there, so money flow is not a big deal. We can take some frequent trades. At least the trading frequency has been a little bit increased. But they used to give a corporate credit card over there, Amex card, where you can withdraw up to 90,000 in cash. Right. So one fine day, this is during 2008. It was a complete bear markets. Was good at investing. I was doing some short-term investing, having some decent success, some Ichimoku strategies, buy above the cloud and sell below the cloud. It was working fine. Investing was going good. And again, was back to the basics. Again, started playing with options. This time, I have no intention to play, but one of my friend asked one of my roommate, Rajendran, I want to buy a laptop. Do you know good strategy in stock market so that we can make some money, and I'll buy a laptop and I'll put your money into your account. We both play, make the money and get out of the game. I want to trade only one time. That's what he said. And now he's in Germany. So I thought, like, I looked into the RSI charts. RSI was extremely bullish. It's at some 97 levels or somewhere. And I told him, boss, there is a correction is going to come. So you take all your money out and from the Amex card, you take your 90,000. I also take my 90,000. I'm already having another 90,000 in my hand. So total 3 lakhs we collected, and we placed on a put all the 3 lakhs on a on a put at the money put. I think some 3 days from the expiry is still remaining. And by that time, I'm not sure about the gamma, delta, theta and all. I know that option could double, triple. That's the game. So I'm expecting market to crash. So what is the play? So okay, go and buy some puts. We bought it on Monday, one fine Monday. That is where exactly the Satyam scam came, and there was a 200-point crash. And the Nifty was down from 2,750 levels to 2,500 levels. There was some good money made. Almost we tripled our money. That 3 lakhs almost become somewhere around 6 or 7, 8 lakhs. It become, and then he took all his money back. I was holding some 4 or 5 lakhs, and now I was feeling like a god. Like I learned. I had predicted something which has been made a serious crash. Now I had one more gut feeling saying that this market is going to crash. So 2,500, I shorted almost 6 lakhs worth of options. I took it.
Okay.
And so that is 2 days before expiry. And next day, my internet is not working and markets are about to open. My phone got stolen on that day. I was literally running through my internet browsing center to close the position because it's an expiry day. The option, you know what option does? I took a 2,500 put option, I believe. That's till today. That is the low from December 2018 onwards. When I'm running to the browsing, meantime, market does a short covering rally. I just got peanuts. Some 25,000 or 40,000 was there. I just took all the money, and then I thought, like, this is not going to work out. So I need to, again, I am back to square one. In that one trade, I was back to square one again. By that time, I was really good at fundamental technical analysis studies. You know, the trend line breakouts, triangle breakouts, flag breakouts, diamond patterns, head and shoulders. Just like every other trader, I had crossed all those stages. Okay, and that's what there is no risk management at all. That's the only problem there. Otherwise, the other strategies which we practice using Spider, it was really doing good. But one such blunder, it again get you back to the damn basics. Just only one mistake, it gets you down to the back to the ground, right? So again restart. Again, this time try something new. Yes, you're good at investing. You're good at everything, and we start again back to investing. Not much of trading. Stopped trading futures for some time. Not into options. Say goodbye to options. Trade little lighter options. Don't bet heavy. That's the real lesson learned. So not much of like 50,000 betting, 1 lakh betting. I don't do that. At least that's a lesson which taught me. Otherwise, still I'll be doing that. If I was still lucky that day, we'll be still under the assumption that it takes a long time to understand. If you go look back and see, now only you'll realize that that's all pure luck. So over a period of time, we need to know what is luck, what is skill. It's luck-based trading is different from skill-based trading is different. So 2008 gone like that. Not much of losses, 1 lakh, 2 lakh losses here and there, and then able to recover back, and then again lose it back to the markets, again recover back. This is the same thing which was going on. So at some point of time, I was feeling frustrated. This is around 2009. I got the real frustration when I invested closely again. I brought 2 lakhs into the markets to invest in Aban, and this time Sher Khan relationship manager messed it up. So I took an 2 lakhs worth of position, 2 or 3 lakhs worth of positions of Aban. This is in cash market, around 400. It went to 440. Not much of frequent observation from the markets. I want to focus on my work there. I was learning a lot of things, a lot of new concepts has been coming in the telecom markets. That's the time they introduced 3G, 4G. Again, more configuration works. So the focus was completely there. And so I thought like we'll move into investing, right? From the investing, I invested into Aban. It was doing some technical analysis breakout. It was doing good. In fact, I was anticipating some bigger levels because everything is going fine. And May 2009, and the election results are supposed to announce. My relationship manager called and said, like, boss, there is a serious market news is going to come. Maybe the Congress may not win, so better close your positions. That could create a lot of panic in the markets. So literally, he was begging me to close my positions there. I was holding 2 lakh worth of cash market position, and so I said, like, boss, I know that it is an my technical analysis are still saying buy only. I can manage my risk, right? So now a bit comfortable with the risk management. This time, little cautious, not an lavishly losing loser. Now a bit cautious, but still the market situations will not allow you to take that kind of game. A relationship manager called, boss, you just close it out. Maybe Monday you open it. He was literally, we are talking about 3 hours to close the position. So he finally agreed me to close the position. I closed at 440. It's a 10% gain. Anyways, there's a 10% gain. We'll close the position and reinitiate later. I don't know how market reacts to events. The very next Monday, markets are opening with the upper freeze. Aban opens around 800 levels. Within 3 minutes, market got closed. 3 minutes or 4 minutes. I'm not able to re-enter also. Even if I re-enter also, it is at 800. Next day also market opens with a freeze. Again, it also closed in 10 minutes or so. By the time the third day, markets are opening at, Aban was opening around 1,100 rupees. My 400 rupees stock is opening at 1,000 or 1,100 rupees. And intraday it went to 1,250 levels.
Did you talk to the manager again?
No, that's the last day I had an account with Sher Khan. That's the last day. That's the last day I'm an investor. Till to date, I never tried investing. From there onwards, I mostly, I really got frustrated, and then I thought like we'll approach something in a systematic way so that which gives slow and steady, consistent return. That's where I learned that what is the reality in the markets, right? So by backtesting the systems, I learned okay, which is possible, which is not possible, which kind of strategy works, which kind of strategy doesn't work. Once you learn. I'm a coder. I want to be a coder, so I'm not able to apply during my entire telecom career. So in the markets, the AMI broker kind of tools makes me to code back again. So that makes me a curious programmer to explore the markets in a programmatic way, in a systematic way. So 2009 onwards, I started building systems. So one of the systems I built so far, one of the popular system is Supertrend. It's not from me, but it's from some other Forex player who in 2009 they created Supertrend, which is nothing but a modified version of chandelier exit, and super trend is much superior to that. And otherwise, in 1994, in Indian markets, they used the older version of super trend, the chandelier exit. Most of the hedge fund managers, most of the family offices, they used super trend in Indian markets. Like one such guy I met is some dynamic securities from Gurgaon based manager. He said, like, we used olden days chandelier exit. Now only in Falcon they give super trend. Can you code super trend for me? That's where we coded super trend in 2011. So I put it till today. It runs in my website. But once so that is where people, for the very first time, they are seeing buy sell signals with a nice cool dashboard which tracks the profit loss statements. And then by the time I started writing everything about trading analysis software. I used to test every trading analysis software to discover more tools, more indicators, more strategies, and started writing strategies this time. I started playing systematic trading because I feel like systematic trading I can also easily one or two trades in a day, and then I can also manage my office as well parallelly. And in the meantime, now that's been almost 2011 now. So 2011, I came to Ericsson for in Bangalore, and this time market calls were slightly picking up because we talk about markets day in day out. We talk about, I'm the only one who talks about market analysis, trading analysis softwares, trading strategies, systems, AFLs, and also started playing those systems. Right, couple of systems I played for almost 2 years, 3 years, 4 years in a row, and returns are not much, but it's very slow and steady. And there are phases, drawdowns, which goes for 3 months, 6 months, but eventually it recovers back. All you have to do is you just follow like a soldier. You have to play the game. And 2011 is where we experimented. 2011 or 12 is where we experimented with Symphony FinTech. So Symphony FinTech, by that time, they came up with a product called Presto, where you can use AmiBroker to send signals to place orders. And I was also assisting locally one of the broker here, Composite Edge, to deploy their OMS, Presto OMS there. So I had to work with Composite Edge to check that how to deploy the systems. We had a lot of conversation on algorithmic trading there. So there we learned how to do an algorithmic trading. And again, the whole curiosity is still 2011, 12, 13, 14. It's only on systems. So far, I had most of the systems which I developed, I kept it open source. And every time we learn something new, every time we learn something better about risk management, Vantar books, that's where the next level of trading, right? So I had been gone through that. Then we started thinking, why not to build some linear systems? Why to follow? Why a system should follow only one rule? Why not dynamic rules? That's what we started developing dynamic systems. Ideas are not much, but we had so far I developed only very few systems which are dynamic system. One such system is a wheel intra, which I developed recently during 2017, which is getting shaped based upon the inputs which I'm getting from the traders who are sitting next to me. So they give a lot of inputs. So based on that, we'll think how we can dynamically change the indicators based upon seasonality. And 2013 is what one of my friend Jay Chandran, I guess you know him better. I'm also using eSignal by that time. He want to explore eSignal because he know that so there is a software called the Market Delta where they providing order flow and market profile kind of studies. By that time, 2013 is the time which Indians are getting used to concepts like market profile and order flow, because the community people, the Trader G kind of forum or Indie Trader kind of forum, that is the only place you can find information on market profile, where some people here and there, they are practicing, and very few people are very religiously practicing. Till to date, very few people are religiously practicing. Some people are here and there, just they are exploring market profile. And so very first time I know that market profile is a terminology, that is something, it's some strategy. That's what I know until that time. This is during 2013 or 2012 by that time. So Jay Chandran inquired me because I use eSignal by that time. And Jay Chandran told like, there is do you know about order flow? I said like, no, I don't know what is order flow. So I went back into eSignal, So you need to enable a separate feature called the TSTQ, some trading quote, trading segment trading quote, some TSTQ feature. You need to that additional feature you have to enable with the market delta. So that I told them, you have to use TSTQ feature. Then you can use market delta. You will get the bid ask information. You will get the order flow time frame chart. That's a study we done initially. So Jayachandran got into e-signal charts. So that's where I got introduced to market delta. Oh, that's a different software. So let's try to purchase the software. Let's try to understand order flow. Let's try to understand market profile. Let's try to create a strategy. Let's try to create a mathematical model out of market profile and order flow. That's the one thing which motivates me to explore some new stuff, right? So I bought market delta. The one month trial. 1 month trial it's free, and next month onwards you have to pay $175 per month, $150 for market delta software, additional another $25 or $50 for order flow. So I closely paid $175 every month for next 6 months, and to study order flow. What is order flow? Can I build some systems on top of order flow? That is a curiosity which brought me in. And ideally, that's complete 6 months. I wasted my money. Closely some 3 lakhs has been wasted only on market delta alone, because I'm not able to gauge anything out of it. No trainers there. Wherever you go there, they'll be talking about big buyers, big sellers. You see the numbers. A lot of numbers are coming. I don't know which number is good, which number is bad. Big buyer. I was backtesting visually. Like big buyer came, but still market gone down. Big seller came, but still market gone up. So it was literally confusing. I don't want to get into a mess. So I thought, like, system is my career. I should not mess up with that. So I given up, and I almost given up. Then I'd seen the couple of trades done by the market profile traders. Let it be Rishi Umrania or let it be Jayachandran. The way they are thinking is completely different. It's completely contrarian from a trend following perspective, right? So in my case, the buy signal comes. Most of my strategies are trend following strategies, and whenever the buy signal comes, they used to go short. Most of the time they win the game. They are able to take a very good mean reversion bets, right? One of the couple of years, what I struggled here is that one good mean reversion strategy which gives slow and steady returns. That's what the focus was. That is the only focus we failed to create a mathematical model on a mean reversion directional game. It's relatively tough to create mean reversion trading game. It will have a very good win rate, but it will not make a slow and steady consistent money, right? So I thought, like, how these guys are able to do. I learned that these guys are using order flow kind of tools to approach the markets. The way they are thinking is, at times they're able to catch the market tops, at times they're able to catch the market bottoms. Yeah, they also struggled in those olden days, right? Now they are coming up with a superior ways of information, but olden days, most of the times when I am entering, they enter ahead of me. When I am exiting, they're exiting. When my system is exiting, they're exiting ahead of me. That's why I was a little curious to explore market profile. So I said, like, let me explore what is market profile. Let me give 1 or 2 months of dedicated time to learn market profile. So I sat every day. I come back to the office. I'll be watching some market profile videos. I'll be going through the basics of market profile videos. Learn that there is a virgin point of control, value area, right? So otherwise, previously I heard it, but every time I remember those names, I used to forget, because a lot of terminology is involved. They call about open drive, open test drive, and failed auction, excess. The terminology keeps on going on and on and on and on. So if I not touching that for 1 or 2 months, again coming back, I'll be losing all my focus here. So 1 month gap, I have to focus on my work. Again, come back. It will be like I'm starting everything fresh. I don't know what is value area. Okay, what is that? 60-70% of the trading activity. Okay, what is the TPO? TPO is the basic element of. We have to remember, memorize all those things, right? So I learned market profile only to build some strategies on top of market profile. So ideally, I'm not able to make anything much. So I haven't traded market profile for quite some time. And then I came to Jim's videos, Jim Dalton videos, which is where I learned a different approach to the markets. The way he explains each and every information is something different, right? So I used to hang around on Jim Dalton videos. So you can find all those Jim Dalton's videos over here. youtube.com/user/jdalton trading. This is his old YouTube video channel, but now he's not posting anymore here because he ventured into a different setup. But all his videos are live here. Almost closely some 50 hours to 60 hours of videos would be there. All are he talking about how to approach the markets in a live markets. Very first time I'm seeing a live trading approach. I never went to any of the seminars. Hardly I went to the conferences, traders conference to speak, but I never listened to any of the live training sessions. For the very first time, listening to the live training session. It's very inspiring, but still I'm not able to grasp what he is talking. He's mostly talking in an US accent, and every time I see, I'm able to dig a new information. Every time we see different information here. Every time he talks, every time he conducts webinars, it's totally a radical approach, totally a radical thinking. So we learned this time that there is something called prominent point of control. Okay, that means short-term players are there. So some market participants, he's the only one who is able to tell that what kind of trading money is coming into the system, what kind of players are coming into the markets. But still, I was thinking about where to enter, where to exit, rather than thinking about rather than focusing on the context. I was thinking about where to enter, where to keep a stop loss, and again, that was again an. So this time I learned some market profile from James Dalton, and I was feeling a little bit confident. And so some basic rules: prominent point of control, and and value area building higher, it is bullish. Value area building lower, it is bearish. I know all those basic stuff, open drive, open test drive. Now very much familiar about those concepts. And started poor high, poor lows, failed auctions. So initially when I started I just want to start with some test money. I don't want to deploy some bigger money there. So I started with 16,000. And let's say if this money goes, boss, I'm going to stop market profile. I'm not going to trade market profile at all. This is during 2015. Okay, so my very first trade was some poor high was there. So I initiated a long, and it went and touches the poor high. And then next comes 2 days later, there was a failed auction. Almost I was betting my money on failed auction. Money got doubled because it was very close to expiry. Failed auction also got cleared, and option doubled. So this was happening for a month. In a month, I was sitting on a profit of 1.5 lakhs. My 16,000 become 1.5 lakhs. That's the thing. I was saying, like, wow, what a very simple strategy this is. There is a poor high, you go and fade the poor high, and then a poor low. When there is a poor low, you bet against poor low, you make money. It's very simple. No, what is big deal? So keep playing that. I was keep playing that for 6 months. 6 months, whatever the direction I was betting, there was a failed auction used to clear. There was a poor high used to clear. 1 or 2 days it may not clear, but third day or a fourth day or a fifth day it comes and clears. Right? This was happening during entire 2015. Entire 2015 was able to make money, and 2016 I started running conferences. We started Divergent 2016. It's where the first time I started teaching market profile. And January, I was literally explaining each and every trade of mine, why I am taking this trade. You won't believe me, all the 25 trades in a row was a hit. I was feeling on the top of the world, like I had discovered something great, and which is very easy to follow. It's just some basic simple rules from market profile. Poor high, you fade it. Buy above value area, you go long. Sell below value area low, you make money. It was working fantastically until that February comes. February, you try anything, market was going against you. Again, March, you try anything, it was going against you. Take some small bets, big bets, everything is going wrong. Again, back to square one, go back to Jim Dalton, try to understand what you're missing. So I was going through the videos again. I learned that something called, he was talking something like an market confidence. Oh my God, I missed the market confidence. Oh, what is that? So you go through each and every video, he was talking about market confidence there. And again, I learned about market confidence. Previously you used to miss something. He talked about, every time he talks about market confidence, I used to miss it. And then again, do some homework, again, try to check the ideas in the live market, try out in US markets, try out in Indian markets. Not working, then try to go back and study. And then I learned that there's something called inventory, right? So then what is inventory? How the inventory gets built up, long term, how the long term inventory happens, when the inventory goes long to too long. You have to take a lot of case studies, you have to do a lot of analysis here, and most of the analysis, most of your opportunity comes only in real time only. Now you cannot do a postmortem studies, right? So postmortem studies rarely works. Most of your approaches has to be taken in real time, then only you can be a full-time trader over here. And of course now from 2015 onwards, I quit my I quit my I quit my full-time office job in Ericsson. My salary by that time was around 80,000 per month. So I quit only to pursue full-time career in trading and to take care of market calls, because by that time it's growing. More people are coming and reading my blog on day-to-day basis. So I have to manage two things now. One is my trading and another one is my market calls. So I got out. I thought like I'll be running some systems. Parallelly, I'll be writing in market calls, writing about systems, softwares, and I will be doing some data business over there. Right. So, but then this curiosity in market profile has been over increased. Now we need to dig much deeper. So my real transformation came when I met Jim at the Bangkok Traders Conference. So I was speaking on rotational trading system, how you can use rotational trading system for active investments. And he came there to talk about market profile. So 3 days, we got a complete learning from him. It's the very first time I'm seeing Jim explaining about a market profile. Otherwise, I thought like I'm a genius in market profile. Right, very first time when he started speaking, I felt really bad about me when I really thought like I understood the concept really in a bad way. Right, very first time I started focusing on market participation, what kind of players we are dealing with, what kind of traders behavior is going up, odd based thinking. Right, otherwise there is no odd based thinking. Just we play only reference levels. This reference market will go there, it will go there. I don't know why the price has to go down there. What should be the psychological reason? Why a stop hunting should happen over here, right? So with that 3 days, I have a better perspective. I would say the better perspective about market profile. And again, I come back and again went through all his videos once. And we got on, by this time, this is almost closely June, July of 2016. And now we have a better picture. Now comes the question, like how we can use this information on day-to-day basis. So we need to build our own strategy. So we started designing strategies on based upon what works, what doesn't works, right? So very detailed way we explored market profile. And so far, every now and then we started observing each and every pattern, how the high has been made, how the low has been made, record everything, learn everything, and what could be the top setup, what could be the bottom setup, when the invalidation comes, when the pattern invalidation comes, what a high volatile market does, how to trade in a low volatile markets, right? So a lot of if and buts. It's not a smooth sail. At times, market rewards in a very, very great way. Whenever markets are rewarding in a very, very great way, again you go on back to the same bigger betting. So you think like bet big and then make big. That doesn't work most of the time. Sometimes it really worked. So one of the options I bet on 3 lakh options. I closely bought some 100 lots of options, and then immediately the option got tripled. Even though I don't used to take a stop loss there. So again, market profile really worked, and the view also came right, but I'm not right till the end of the game, because that option which I took at 30 rupees, I closed at 64 rupees, 100 lots. It ended up 264 rupees end of the month. So there are a lot of challenges, still a lot of execution challenges, still try to get this right. How to get this right? That is the curiosity. It comes. So I really learned that if you go deeper, it cannot be very simple strategies. Ideally, end of the day, you need to bifurcate into multiple scenarios, different markets, different situations. You have to handle in a different fashion. So you need to have a solid framework. That's a framework. You have to build your own framework. You know everything about market profile, but to handle it in a proper way, to handle it, you need to put a process in place so that when the processes are in place right now, you can manage things no matter what, whichever the market direction goes. You can able to manage in a lower time frame. Like this month, 10 to 11,000 levels, we are not we're not bullish. When the price is coming down to 10,600 also, we are not bearish. And now we are bearish because all these are completely process driven. Every time there is a session on TradeZilla, I learned something new. Yes, this session I learned more things here. We are able to every time you see the markets, there will be some different pattern, some complex pattern unlocks. A lot of complex patterns are still undiscovered in market profile and order flow perspective. So what it requires is a lot of screen time. The more the screen time you're going to have, more the experience is there. But somewhere you have to start. The journey is not easy so far for me, but at least for you people, the journey will be a bit easier. I had spent most of my money in experimenting in strategies. Some strategies worked, some strategies rewarded beautifully, some strategies I lost. So the entire TradeZilla is all about a collection of what works in the markets, and what not to do is more we have to focus rather than what to do in the markets, right? So I guess whatever I presented is a beautiful framework, and I believe that will bring you an more successful odds in your upcoming session. The only thing is that don't lose your curiosity. The moment you're going to lose the curiosity in the markets, you're out of the game. You'll be looking for, again, you'll go back and you'll be looking for simple ideas which will double your money or triple your money, right? So doubling, as I had seen doubling my money also, I had seen 100x returns also. But what is more important is that handling with the right money management, that's what it matters. In options, doubling and tripling, it doesn't matter. It happens once in a while. It doesn't happen frequently, but it happens once in a while for you. Either you're lucky, or even if you're skill based, it happens very rarely. That kind of events are going to be very rare. It doesn't happen every now and then. So try to be very realistic. What is real, what is not real, what is achievable in the markets, what is not achievable in the markets. Try to have a realistic goal in the markets rather than having something like I want to make 3,000 rupees in a month. Everything looks good on the Excel sheet, but when it comes to real life trading, it's you and me are completely different animals when it comes to the markets, right? So learn to understand which is a better trade location. Learn to understand what price level if I'm going to enter, I'll be exiting safely. Even though if you make wrong, you can exit wrong. How I can manage position when something is going wrong. So these are the studies which will put you in the right place. Yeah, try to have a good knowledge on options if you want to handle in options. Definitely, a lot of tools are available there. So right from option Greeks, right from all the complex option option strategies are available in.
Sir, any websites or any video on YouTube we can go?
Last time I recommended the tastytrade.net. There you can find lot many interesting.
Which one, sir?
Tasty Trade. Most of the option writers, they used to hang around there. Tastytrade.net.
Can you share that link?
Link, sir, please.
Tasty Trade. So they use it's a live network where they used to do a lot of sessions. Most of all the basics of options. Anything name anything on options, right from simple stuff to complex stuff, you can find there. It is a live show run by some two people are running that. One is from Slope of Hope. So here under the learning section, they have a lot of learning section. Most of the option writers, they got inspired by this site, and most of the US based people, they learn most of their basic options to right from the complex option here. Not many option backtesting are explained here. So one good place to learn options here. If you are serious about options, you can learn from this site.
There is one site, an option school, sir. Is it? Have you seen?
What is it?
Option school.
No, I don't comment on anyone.
Just wanted to
You're talking about Pradeep, right?
I don't know, sir. Just in the Google, I have come to know 1 week back.
Yes,
Options.
sir. Pradeep, sir. Yes, sir. The options TOS.
Yeah, Pradeep once came to my place. The review was so far positive about him. Like some of his clients are really making money, and some of the clients are still having accounts with Tragini. So I used to sit at my broker office for Tragini. So he used to conduct some couple of courses there. So far, I got a positive review from the people. Right?
So I have a different view, just to caution people. So just study very deeply on the options part, and just do not go by what is taught in the courses by option school. Yeah.
Okay. The only thing I know is he's from IIM graduate and IIM IIT graduate, and then I face to face I seen him once or twice. So some reviews from the clients are good. That's the only thing I know about it.
Sir, I have one question.
Yeah.
Sir, like J, you, and Mr. Dean, I have seen the videos in Bell TPU website.
Yeah, Dean is good. Dean is amazing. You should. He's one guy. He's also learned his trading lessons in a hardcore way. He don't misguide people. I know that. He don't talk about any exotic stuff in the markets.
Which one, sir? Dean?
Yeah, Dean.
In option school?
No, not in option school. Dean. He also taught. He does market profile, order flow, and what market profile, order flow, and VSA.
VSA.
Yeah.
Yeah, you can find him as a mentor in Bell TPO.
Yeah, so he's also one of the mentor of Bell TPO. So he talks realistic about the markets. He know what works, what doesn't works. But his way of market profile is completely a different approach. He's more of an market profile, Wyckoff, VSA kind of stuff. I am more of an I try to not to mix any further concepts from apart from market profile and order flow. I don't try to mix much. Here and there, 1 or 2 indicators we'll watch, like something like an extreme sentiment indicator, a turbo RSI. Apart from that, we stay away from indicators as much as possible when I'm using market profile and order flow. Right? Otherwise, I'm not against indicators. I also build systems. Some of the systems are used by my clients, so successfully they are running it. And some of the people are really sitting in my office and they are handling it. Day in, day out, we discuss about systems. Day in, day out, we discuss about profile. Day in, day out, we discuss about order flow. So it's my day-to-day job now.
So my question is, you all three guys are disciples of Jim Dalton, Jade. So
most of them are, because you go through the videos. It's really inspiring to watch. I mean, very first time, if you're not hearing from me, very first time you are going and listening to the Jim Dalton video, you would have been seen that as a radical approach to the markets. Nobody you go to any YouTube videos, nobody talks sense about markets. He's the one who talks realistic sense. Even now, you just go and watch the videos. You can only experience it.
Hello.
So why the market understanding developed different? I mean, for all three of you.
It is different because our learning curve is different. Maybe Jay uses a mix of price action and market profile, and Rishi Umrania, he's one more fantastic order flow trader. He's called as a Sweet 16, and he uses combinations of Renko studies and volume spread analysis, order flow, and market profile. So they use market profile for the context, and order flow to trade the information. And I also learned a couple of good order flow information from him. I would say that is one of the first time I listened to 2015 he came to an Mumbai conference, and I also speaking, and Rishi Murania also speaking. I was speaking about dynamic trading systems, and he talks about footprint. I already tried footprint, but the very first time I'm hearing from him, and that was again an eye-opener to go back to the basics to start about footprint. This is during again 2015, and there are no much of Indian tools by that time. Only 2016 September or somewhere by the time both global data feeds and True Data, they launched their tick level charts. So prior to that, you have to only depend upon e-signal. So now 2016 late onwards, you'll be seeing. People started supporting for Indian markets. Otherwise, everyone has a different approach because everyone came up with a different learning curve. I came up with a different learning curve. I approached market profile only to develop some systems. Right? Probably the Jayachandran or Dean, they would have been digging the forums where some of the forums are still locked, where people share their experiences, some of the trades, right? So they have a different set of observations, and everyone, there is a learning curve is involved. That's why I said, like, over a period of time, you have to develop your own framework. What works for you, what doesn't work, which you are good at, which you are not good at. Once you are able to cultivate your own process, once you are able to figure out, not necessarily you have to follow what I thought. What I thought is based upon what is my 5 years of screen time, right? So over a period of time, you have to discover, maybe you might be able to see some different patterns. The G2, G3 are not in the textbooks, not in any of the market profile. We feel that kind of patterns keep on repeating every now and then. And so the curiosity is how to catch those faster reversal, why those faster reversals are happening, and what could be the reason, how the participation action could happen there, what could be the underlying participation behavior which is motivating the markets to do a short covering rally, or all in a sudden a good market, why it has to liquidate. So that is where the G2, G3 came in, and Jim really given an example about ABC elongation once in his webinar, and that explores me to look into each and every ABC elongation. That's why I learned that. So I go through all the charts whenever the ABC elongation happens, record it, and then check which ABC elongation works, which ABC elongation mean reverts, which ABC elongation does a complete recovery, how it is related to global sentiments. So every other day is a learning for me. So every other day, market does something good which I don't know. I used to take a note of it. At least the next time it repeats, I'll again take a note of it. Next time if it repeats, then I'll go and check why it is repeating again and again. And then we'll try to understand, go back to the old structures, try to understand why it happened, what could be the reason why it's happening, what is the sentiment of the day when the China opens gap down or other. So I used to have a blog, so I used to write about all those sentiments. We used to talk in Slack day in, day out about what kind of market emotions are running in. So that is why we are able to discover more and more different patterns. So that is what the super subset of opening confidence. That's why the market confidence, the way we have a market confidence, which supersedes all the opening types. So now we don't care about opening types. For me, market confidence is more important than opening types, because market confidence itself superior to the open type. That's how we designed. That's how I designed the market confidence. And then inventory. So I collected where I just looked into each and every top, highs, bottoms, and then learned which is the inventory which goes long to too long. What are the places where inventory goes short to too short? How to play it. There are times where you know that inventory is getting long to too long, but still it will be difficult to play. How to manage those things. And so that means you have to be you have to do a fine work here. That's why Jim calls market profile is an art of doing business. So it's not a science, it's purely an art. A lot of skill is involved over here, and the entire framework is developed on this skill. So, and yes, over a period of time, I believe it gets shaper much better and better over a period of time. And
Hello,
that's my journey so far.
Hello, sir.
Yeah.
Sir, how is Jim Dalton health right now?
Jim Dalton?
Health, I think he's not.
Yeah, he recently had a heart attack, I guess. Now he's recovering from the heart attack. Otherwise, he's supposed to do some intensive training, which got postponed, it seems. He's almost 76 years old. He lives in Alaska.
Okay. Thank you.
Yeah.
Sir, one question.
Yeah.
People like a full-time employees like us will not have a screen time, actually. So
somewhere you have to start. So at least you can. So always, even if you don't want to, if you cannot spend screen time, maybe one question you have to ask: why you are coming to the markets? Definitely to make money, right? Not for fun.
Yes.
Then if you want to make money here in markets, the only thing is that you have to be really serious about markets. If you want to establish full-time career here, then you need some method which keeps you like you want to repeat the same process again and again, and that's going to get you sustainable, slow and steady money. Fast money you cannot expect every time. Yes, at times you might get, but that fast money you cannot do it again and again and again. I had gone from my experience, I'm talking, you cannot make that money from my 12 years of experience. You cannot make that fast money again and again and again repeatedly. You cannot make it, right? Yes, if you have a good skill, you can make it, but and then next time you have to come to the reality, and then you have to play the reality. Every time you cannot play a bigger game, right? So you play a bigger game, and there was a good opportunity there. Again, come back to the reality. Try to scalp. Try to that's how an full-time trader's life is supposed to be. And whenever there is a big opportunity, you smell the big opportunity, you are the first one to step in. That's fine. But every time you are thinking about a bigger opportunity, some other way you're gonna back to square one. Like how I went from I made 6 lakhs money and then completely bust. You'll be again back to the square one again. Faster you will lose money every time you are looking for a bigger game. So one thing is, what is the opportunity which is present from the market profile pattern? How I can take it realistically? When it invalidates, when to step away? So you have to build a process within you. That is where it puts you in an. Otherwise, there is a failed auction. Okay, I'm gonna take a trade here. Failed auction comes. I'll make money. If it goes, I'll lose all my money. Okay, it's fine. Then you're not a serious trader, right? So maybe you will be in a luck phase. You will make money. Just I went through those luck phases. At times, those luck will be repeating 25 times in a row. You'll be feeling like a god. It's like taking a marijuana, and then you'll be feeling like I'm the god, right? So when I say market falls, it falls. When I say market goes down, it has to go down. When you have that cognitive bias, right? Jim always talks about that cognitive bias. I guess if you want to, it is always good to start market profile from fresh. You start with Jim Dalton videos. Maybe initially it's very tough to digest those kind of information. But over a period of time, once you're accustomed to those kind of information, you may not like any indicators, you may not like trading strategies, you may not like anything other than market profile and order flow.
Yeah. Yes, sir. Yeah, right? I understand. Yeah, but your story is very inspiring.
You have to take it as a habit. So my market profile and order flow is my habit now. It's one of my habit, like drinking water, breathing oxygen. It's something like a habit here.
Yeah, yes. But all of a sudden we can't jump into this now without any confidence. That's why
somewhere you need to start. I guess this will be a good starting point for you to do something meaningful in the markets.
Yeah.
So otherwise, I'm a guy who already went through all the technical analysis indicators. You name any technical indicators, I would have went through, and then pivot studies, Camarilla pivots, and then range bars, Renko bars, and the Ichimoku clouds, Fibonacci patterns, Fibonacci retracements, Fibonacci fan, Gann fan, all the Gann time cycles, and Elliott waves. And then what is that? The Glenn Neely, he used to write one more Elliott wave patterns. What is that?
Neo wave, is it?
Neo waves. Neo waves. I studied that book at least 4 to 5 times. I'm not able to cross the 7th page only. So I know Elliott waves. So I thought like maybe Glenn Neely waves might have some, but it was so complex to me. So I thought like it's not my cup of tea. I given up. Otherwise, I had some good reviews about that. I'm not against Elliott wave, but the only thing is that it's mostly our own thinking which will not allow us to cultivate a proper process on the top of Elliott wave. And so whereas I seen one good, most of my Vinod's analysis will be really pin perfect. So he used to do a lot of Elliott wave analysis. And a couple of my friends, they do good Elliott wave analysis. In fact, Dean, he also initially he used Elliott wave, and a lot of execution problem. That's what it makes us to move to search for something new, right? So for me, market profile and order flow is an accidental discovery. For him, it's a different story. I guess There are a couple of YouTube videos he posted. He explained his story there, and yeah, so far you go and meet every market profile player. They have a different set of experience, right? So, but everyone had their process. If you look into Jayachandran, he has his own process. If you go and look into Dean has his own process. I had my own process. So the only thing is I would like to make my process as robust as possible. So that robustness will come only with market experience. As you see more information, as you see a different information, you don't know why it is happening. And maybe later part of the day, after 6 months down the line or 1 year down the line, you will be able to see the process repeatedly again and again, repeating back. And you know that why this could why this could happen. Next time you will be able to see the setup, you can confidently say that this could happen possibly, and this is where my invalidation point. You'll be able to prepare a strategy by looking into those visual indications and with a very high probability, right? So, and that is where it requires a screen time. Definitely one have to pursue it if you want to take markets as a full-time career, right? And many people ask, what if the strategy which is working now will not work tomorrow? What if many people understands market profile? What if many people start using order flow, right? So it is not the people using tool. There is a significant learning curve involved there. I'm having 5 years of screen time. There are many traders who use market profile and order flow, like people like Jayachandran. He used to have 6 to 7 years of screen time, and Rishi Umrania, he again used to have 6 to 7 years of screen time, and Dean again, he has 6 to 7 years of screen time. So that screen time is what makes you to take a right decisions most of the time. Yes, I'm not saying that you will not go wrong. You may go wrong terribly also, but you will be able to recover from those situations. Again, you will be able to put yourself on the right phase, right? So during those phases, you're going to make a lot of mistakes, but try to make less mistakes as much as possible. Don't try to go in a big bang, and then don't try to, like, I'm saying, like, now 10,200 Nifty will definitely come. I'm just talking from my past confidence and past experience. I'm talking that I might go wrong, but what I'm saying is a high probability. So don't try to bet your life there, and don't try to blame me tomorrow, right? So my bets are pretty decent bets. I'm a high risky trader, right? But now I'll be always coming in packet sizes. I don't bet my all my 6 lakhs or 10 lakhs in one chart. I don't burn it every time. I'll be waiting for the opportunity. Opportunity is not there. I will go and do some building some algorithmic trading stuff, or I'll be developing some systems. I'll be focusing on systems, and I'll be building some automated trading tools. Now, recently we built an automated trading tool in the broker office, which I'm sitting there. I used to sit in TradeGenie. So we built we jointly collaborated with one more developer, and we built an automated trading platform for the broker. So when there are no trades, there is no reason to trade at all. When there are days where you know ahead that this market will go into a sideways mode, so no point of looking into the markets, observing the markets. So those times I'll not be even watching the screen. I'll be watching every 1 hour once, but not continuously on the screen. You don't need to be to learn market profile initially. You don't need to watch every second, every minute. You don't need to watch. Just first try to understand how the auction is developing, how the point of control is developing. For that, in a hour once you can look into the market profile. That's more than enough initially, right? So how the balance is developing. You don't need to be on tick to tick. You don't need to monitor. If you're watching order flow, yes, you have to do that. But if you are watching market profile, you don't need to be that precision level. You don't need to do that. There are days where I initiate a trade, I close my screen. I don't even open my trading terminal at all. When you're seeing in my office, I never used to open my trading terminal. I used to open only when I'm opening position. When I'm closing position, the second time I'll open is only to close my position. In the meantime, I don't watch M2M. I don't watch the watch list. Many people have the habit of watching, looking into the watch list, that flickering moments, right? So it ticks up and down, up and down, up and down. When you're watching that, if you're a guy who is watching the trading terminals day in, day out, right? So I'm telling you, you definitely will have a terrible balance sheet, right? So stay away from watching the price all the day. It's not going to make. Most of the time you will be seeing something all of a sudden Vedanta crashes 16 to 17%, and you want to enter into a short. Vedanta would have been never into your plan. Zeal would have been never into a plan, but still you've seen that all of a sudden you're seeing on your screen, Zeal was crashing or Vedanta is crashing. You want to enter into those trades. So those are most likely price-based emotional decisions. Try to stay away from that kind of things as much as possible, right? So don't. That doesn't mean like you should close my terminal like what I am doing. I'm doing because I got used to that. So when I initiate a trade, I don't even look into my trading terminal. I close my trading terminal. First thing I'll do is once I initiate my trade, I'll close my trading terminal, and I'll be focusing only on my market profile charts and order flow charts. And when there is an exit, always there is a mobile there. Anytime you can open your mobile and log into your account with just a one-click button and then square it off. It's as simple as that. Or there is an web applications are there, exe terminals are there. So not a big deal, right? So these days. So that's how it's been. And definitely the journey is not easy. It's been a rough journey. At least for you people, the journey, the path which I'm sitting in could be a bit smoother, right? So it's going to be a rough. Markets are definitely going to be rough. The only thing is learn to deal with that. You're always going to see some complex information which you are not going to interpret right now, but maybe over a period of time you might be able to figure it out why it is happening. But as of now, most of the complex informations are you'll be able to sail through most of the complex informations which I've been went through those information. So try to watch the videos as much as possible. Try to take notes. Try to have a trade log. Right? Try to record your own emotions or where exactly you're going wrong. It's not just market understanding. Many things has to do about your self-understanding also. You have to work on your trading psychology as well. And then market understanding alone is not going to make you a better trader, right? So market understanding will put you one step ahead of the other trader. It put you in a competitive place. But if you want to have a real sustaining career, you need to work on your self psychology as well. But market profile and order flow goes hand in hand. Rather than looking into only trading opportunities alone, try to make an objective career over here, right? So initially when I approached market profile, it was so subjective. I built subject in such a way that it is so subjective that poor high will clear, that this will clear, that will clear. But over a period of time, you have to bifurcate which works, which doesn't work, which is subjective, which is objective. Try to approach market profile in a more objective way, right? And that's where you can, I believe you can make an successful wealth by trading alone, right? So you can have a successful day trading career. You can have a mix of a game here. When you want to trade, you can go with a day trading, or when you don't want, you can just simply shut off and you can go home and you have fun with your family. And only there is an opportunity, come to trade. There is no opportunity if you don't understand the market. Just take your readings, take your notes, and there are places where not every time the market gives you positional opportunity, but when the market is throwing you positional opportunity, you should be in a position to ride those opportunity rather than taking only intraday trades there. It doesn't matter, right? Because doing an intraday trading alone, it's something similar to doing a coolie job. That's what my broker says me, Rajendran. Whoever doing intraday traders, they are just doing a coolie job. They want to quit their IT job and they want to come here and they want to do day trading, right? So I'm not saying that day trading, all the day traders are coolie job players. But what you have to do is that not only exploring day trading opportunity, you should be exploring positional trading opportunities also, right? So because day trading alone, you cannot make a fortune. You can make money there, definitely. There is a lot of edges there, but most of the bigger money, once your money is started growing, you have to make some low risk instruments, or maybe you have to play a bigger game. So day trading alone is not is not your cup of tea, right? So there are places you have to take a positional trades. Maybe there are places where you have to do some investments for, let's say your capital is 1 crore or some 50 lakhs or 10 lakhs. You cannot dump all your money in trading alone, right? So you have to park some of your assets in a low risky instrument. So maybe an investment could be a good vehicle. So park some of your allocations in Lupin or park some of your allocations in some stock, or some instruments which could give some decent returns, and other stuff you come to allocate some 30% to trading for generating more income, where you have a very good confidence that you can handle any kind of market situations, right? So any kind of market situations, a big gap up, big gap down, it doesn't matter. You will be able to sail through all kind of trends, sideways markets, compressed markets. That is how I'm seeing market profile and order flow as a tool to trade in any kind of market situation. When I don't want to trade, I just simply ignore and then I'll move on, right? So when I want to trade, I'll look into market profile, order flow. I'll try to understand what is the nuances, what kind of opportunity it possesses. Is it an intraday opportunity? Is it an 1 or 2 days of opportunity? Or is it an positional opportunity? Based on that, we'll try to play accordingly, right? So otherwise, none of the strategies gives more importance to time than market profile does, right? So depends upon what kind of opportunity it is, we play accordingly. At times we'll scalp, at times we'll do intraday, at times we do positional, at times we do investing also. It doesn't matter, right? So that kind of confidence it gives you when you truly have a better market understanding. Okay, that's all my story. So I guess what I want you people to do is that go back to the basics again and again. Don't give up. Definitely it is a complex topic compared to other topics. Definitely you have to struggle here to learn something new, to learn something which works, to learn something which could make money for your career. If it is going to make money for your career, definitely you have to take that as a serious business. So don't give up because the subject is complex. Don't give up because don't give up your curiosity because it is tough to explore. Only those who can break the barriers, I believe they can succeed. Not many can break the barriers here. And so learn to push yourself hard. Definitely it's going to consume time. Like any other business, like an engineering, like doctor, trading is also a serious profession which cannot be learned in 1 or 2 weeks or even 1 month. This 1 month, I think you would got some better perspective. Maybe some of the things I'm not able to articulate well, you can give me some suggestions. You can send me a personal mail saying that, hey Rajendran, you're not able to explain this concept really well. Maybe you have to improve here. Maybe you're not able to articulate this well. Maybe you have to improve this place. So if you are able to give me honest feedbacks, then I'll take it sportively. Even if you say like the strategy is not working, you tell me, we can work out and we can understand why it is working out, how better we can do. That kind of discussion always happens in Slack. Still it's happening and it will happen, right? Any questions?
Thanks so much, Rajendran, for an excellent session for last 4 weeks. I think I personally learned a lot. And
yes,
this an eye-opener how to see.
Thank you very much, Rajendra, for this one.
Yeah, thank you. So, yeah.
9th Gen commentary has been wrongly uploaded.
I'll look into that. And some of the couple of days, last 2 days of commentary is not uploaded, and today's video will be uploaded. Everything will be uploaded by today, and I'll try to fix those Jan 9 commentary also.
Okay, thank you, sir.
Yeah.
Yeah, it was a very nice session. Before sometimes what I used to think is like we should trade every day. We should get into market and do something. Do opportunity exist or opportunity does not?
See, I also went through that phase. That phase I went through during 2008. Every day I want to trade something. I want to trade only 5 or 10, 7 trades, and I want to make money. I'm happy if I make 3,000 also, 5,000 also. I'm happy, but some way I want to find some trade. So every day you'll be digging into the charts. You'll be running through the charts day in, day, night. So 3 hours, 4 hours, you'll be studying, running the scanners, again, getting some combinations of RSI, which are the charts which are trading about the Bollinger Band. I also went through that phases. That makes you over trading. Here we are not focusing on over trading. We are talking about taking high quality trades, right? So that's what we are focusing here. Try to trade try to take a high quality trades, try to wait for such kind of high quality trades to arrive. Definitely market will show you somewhere. The only challenge is that you have to learn to wait. That itself an art again here. And I believe once we done that, you don't do over trade. You don't want to take 5 trades, 10 trades in a day, unless you have yes, doing that it's fine. But if you're coming into the markets only to do some 5 trades, 7 trades in a day, then you're coming here for fun. You're coming here for thrill. If you want to do a quality trades, you have to learn to wait.
Sir, this Trader Cafe one, sir. Trader Cafe.
Yes.
Oh, sir, any trial, entry for us? So just I wanted to know, we need to, we can increase our knowledge or something like that.
So it's a co-working space for traders. Most of the time we'll be only talking only after market hours. So most of the time everyone will be busy in their trading. Even a couple of the people here, Abhay and Lokesh Arya, who are attending the session, they are from Traders Cafe, and we don't really talk during market hours, right? So most of the time we'll be going for a coffee. There we'll talk, or we'll be having, and sometimes we'll be having a session on market profile or trading strategies or algorithmic trading. So mostly it is mostly a networking place, but everyone handles their own individual account. And yeah, at times we do a joint trading. Sometimes they'll say like, this is looking good, that pattern is looking really well, so can we trade that kind of mutual discussion based, we'll do some trades. And otherwise most of the time we are independent during market hours. Nobody will come and back and say like, boss, you buy this, you sell this. We don't do that kind of advisory. Right, so mostly it is we'll try to understand what is happening. We try to understand the risk, and then it's mostly a joint decision we take over there. Right, so what kind of risk management we can adopt, whether we can hedge or not to hedge, that's kind of conversation usually happens there. And yes, that's what happens there. So, but if you want me to guide from the back every day, coming back to your screen, and that's not the place. So everyone are full-time traders. Everyone handles a decent set of portfolio size, and everyone are independent on their own. That's what Traders Cafe is all about. And we're also looking for players with that kind of experience. Like they can manage. They don't want to be, trading is a lonely business, right? So if you trade alone, sitting in the home and doing a full-time work, it's not going to work out. You're not going to get ideas. But if you are in a like-minded community, we'll be talking about many strategies. We'll be talking about what way we can do a strategy better. Like most of my trading strategies got better because I discussed with them. Probably they discussed with me, and they got many things clarified. And it's kind of a mutual environment where I benefit from their views, and we benefit from their views. Some of them we jointly worked on backtesting a strategy. So they done a lot of backtesting on crude, lead, natural gas. Whereas I don't even know that those strategies which work on the lead, or they done a lot of risk management rules, how to do a capital allocation. So it's a joint study. It's what you'll be gaining there is a lot of tangible benefits in terms of study. Like everyone does a study in their own different way, and commonly we share what works, what doesn't works. That's what Traders Cafe is, but it's not an education stuff. It's only for the people who are serious about trading, who are already doing full-time trading, and where they are feeling lonely, where they want to network with traders, and they want to learn mutually from each other, right? That's the place it is. So any other questions? I think we can stop here. Many people have to get back. So one final session is there on Monday, right? Monday on February 5, I believe. With that will be February 5 is the last daily market commentary. With that, we'll be closing for the session. Right. Thank you.
Thank you.
Thank you, sir.